All right, guys. So I know the mic is bad. Let me go get the other mic. I got another mic from a charger here. Give me 1 second. All right, yeah. So today Jerome Powell speaks. He speaks at 9:30. Great joke, Ricky. All right, I'll be right back, guys. Hold on 1 second. Yeah, today market pushed up yesterday with the SPY hitting 436 by end of day. Jerome Powell speaks with the ECB panel this morning at 9:30. It'll be streamed here in its entirety. Get ready. Let me go get my mic here. I got my better mic. Give me a second. I'm gonna go get my good mic. Hold on for a second. All right. Oh, there it is. Okay, cool. Y'all just gotta remind me. Y'all just gotta remind me to switch my headphones out, man. Y'all gotta remind me to switch my headphones out when it's time, because I gotta switch my headphones out. Oh snap! Hold on. All right, there we go. Can y'all hear the music now? Let me stop this for a second just so I can make sure y'all can hear the music. The music's kind of bad, but let me switch it real quick. There we go. All right. Micron earnings after the bell. Bro, I go to the casino last night, dude, and I'm trying to play poker, man. That's all I want to play is poker. I don't want to play blackjack. I don't want to get kicked out for card counting. Like, I just want to go play poker, man. I go to this freaking casino here in Michigan, dude. They do not have poker. No poker, bro. What kind of casino doesn't have poker is my question. Like, what kind of casino is like, hey, we're just not going to do any poker tables? What? What kind of casino is that, bro? Freaking, what the heck, man? What kind of casino doesn't do any poker tables? That's my question here. Like, you know? No, dude, they had blackjack tables because I ended up sitting down playing blackjack with some old dudes with Carol. Carol didn't know how to play blackjack, and so, but like, they had table games. They just didn't have freaking poker. Yeah, so they had table games. They just didn't have poker. I just couldn't play poker if I wanted to. Yeah, but they were all close together with the other table games. I don't know. I was just mad about it, bro. I drove like 20 minutes there. Yeah, it could be the dealers. That's what it could be. And I'm really not a gambler. Carol told me yesterday, she was like, I finally realized you're not a gambler, John. Because I go here, right? And I find out, like, we drive all this way to go play poker. You know, because that's what I really wanted to play was poker. Yeah, y'all go give Pawn a follow. But yeah, so we drive all this way to go play poker, right? We get there, we go to the casino. Casino is like a freaking dopamine, like there's just flashy lights everywhere. Like they're just distractions, bro. Honestly, it's overstimulating. I don't like it at all, to be honest. And so we drive all the way there. We get ready to go play poker. I get ready. I take out some cash to go play poker, and like we get there to go play. And then they're just like, nah, we don't have poker. And I'm just kind of like, what? And so we end up sitting down at the blackjack table. And bro, I sit down for like 20 minutes. I win like $50, you know, playing like $15, $20 hands of blackjack. And like Carol was losing, I was winning. And so after like 20 minutes, I was just kind of like, all right, like I'm done. Like, let's go home. Like, this is boring. Well, we stopped playing blackjack for a second. We went around to like, we spent $20 in slots because it's like, but I know the edge is so small in slots. Like, I know you're programmed to lose money in slots. And so it's very difficult for me to do. And so after like 15 minutes where we ended up losing like $15, $20 in slots, I was just kind of like, hey, look, let's go. So we ended up leaving. We didn't stay and gamble our money away. And so we considered it a W because we didn't lose money at the casino. Because I really don't like gambling. Like, gambling's not fun. Like, having a statistical losing edge is not fun for me to do. You know? Like, having a statistical losing edge just does not sound fun to me. So, I would have loved to play poker, but whatever. Yeah, that's cool. I didn't even realize they were doing that. Yeah. Yep, I want to see it. So my money finally settled here. Now I got to figure out how to wire money to MooMoo. At least Capital One let me get my money out of there, dude. As much bad things as I said about them, at least I'm glad they got, you know. Pay and transfer, wire, add recipients. Go ahead and send me the code. Where's the code? There's the code. All right. Code. All right, guys. So we are getting we are going to be putting all our money in about MooMoo. In MooMoo, or at least some of our money. TD Ameritrade should be back open to day trade, I think, as well. Let me make sure. We should be back opening. Yes. Yes, we can. Let's see. Okay, yeah, we can day trade again. That's good. All right, so we're back open to day trading on TOS. We also pretty soon are going to be able to day trade. On MooMoo. Just going to switch this money around now. All right, guys. Sorry, I'm about to transfer. Okay, they don't let me copy paste. Whatever, dude. All right. So, try to get my money over there to MooMoo. All right, guys, give me 1 second. All right, so we got the bank info. All right, guys, so all right, so we should be good. So we're good there. All right, so we got all this set up. We're gonna send this money today. All right, we are done. All right, guys, we do have Tesla popping up a little bit. Let me check back on the stream. Sorry, I had to send some money. Yep. Remember, we got Powell speaking today, man. We also have MU earnings. Yeah, earnings season in a couple weeks. What's up, Tesla Bull? Powell speaks at 9:30. Earnings preview for General Mills. Yeah, I got you, man. Hold on one second. Sorry, I had to transfer some money. Again, I told you guys this yesterday, but it's cold in here, bro. Damn, dude. But no, I told you guys this yesterday, dude. I sent my money to Capital One. I wired my money to Capital One, trying to wire my money to MooMoo so I would have 25K in TOS and 25K in MooMoo. And so I was wiring my money to Capital One so I could wire it to MooMoo. And Capital One basically, I tried to wire my money out of Capital One, and they were just like, hey, you know, it's not working right now. There's a glitch in our software system. And so I'm like, well, okay, well, how long is this going to take to get fixed? Because I just wired over 20 grand to my account. And they were like, oh, you know, it could be because you just got a new phone. And I was like, yeah, but my phone number's the same. Like, it's the same phone number. You know, they were like, oh, well, it might take, 2 to 3 weeks for us to get everything settled on your end. And I'm like, so what does my money do for these 2 to 3 weeks? Is my money just stuck here for 2 to 3 weeks? And they basically just kind of shrugged their shoulders. And I was just like, dude, there's no way for me to like give you guys verification. Like y'all could y'all could Skype me, or y'all could verify. I mean, another way, you can have me send you ID. I could give you my social. I could do all these different things to verify who I am. Like y'all instead of just freezing my money for 3 weeks randomly. Like how incompetent are you guys? And so then I try to change my phone number because the original glitch happened because it said my phone number was off. And then it freezes my money, they say, from wiring for 60 days, bro. And it's like, dude, if it's this hard to transfer money with you guys, then y'all are terrible. Capital One, I took my money out of Capital One so fast, man. I'm not going to tell you where my other banks are, but it's not in Capital One anymore. I think poker's definitely not as popular as it was like 20 years ago during the poker boom with Chris Moneymaker and all this stuff. But it's still pretty popular. Like World Series of Poker, you're winning like $12 million if you win the World Series of Poker. So it's pretty popular. So yeah, I'm going to look at GM or General Mills. They dropped their numbers at 7 a.m. So they dropped their numbers in like 8 minutes. They're expecting 105 EPS on 5.15 billion in sales. We got some other earnings this evening, but those are the big ones for this morning. Yeah, definitely top 3. Worst ever in the world for sure. Definitely top 3. Yeah, General Mills owns everything in terms of cereal. They really do. They own so much stuff in terms of cereal. It's kind of crazy. What puts on Nvidia or printing? Yeah, I mean, Nvidia's down, but Nvidia, man, like, it's so volatile right now. Honestly, the guy I was sitting next to playing blackjack with yesterday was talking to me about Nvidia. Because like it got to a point where he was like, hey, well, what do you do? Because I was like, yeah, I got to work tomorrow, so I can't stay here too long. That was like, you know, my excuse of leaving the table. And he was like, well, what do you do? And I tried to be vague with it. I was like, yeah, you know, I'm a marketer. And he was like, you market what? And I was like, okay, you know, I was like, I talk about the stock market on YouTube, you know. And then he's like asking me about it every time. I hate telling people that. I really do. It's not fun to tell people. They either think I'm like a Logan Paul-esque influencer jerk, or they think I'm out here selling courses for like, you know, 20K a pop. And I'm not either one of those, man. I give everything away for free. I just stream stock market news, you know. AI bubble. Yeah, I mean, the real question during the next earnings season is, will AI correct? That's the big question, man. I don't know. That's the big one that a lot of people are waiting to figure out. Will AI correct? I don't know. Nvidia down, but very volatile this morning, down to 404s. Dude, it's cold in here, man. I might need my hoodie. It is not warm in here. Everything correct. Am I a boomer for not knowing who Logan Paul is? Yes. When people know I'm in crypto, they think I am a scammer. Yeah, I mean, it's not me. I think it's just the rest of the niche, you know. But yeah, if you don't know who Logan Paul is, you're definitely a boomer, as they say. My first stream was Nvidia earnings 2 months ago. Hey, what's up, Tesla? Hey, well, welcome here, bro. Honestly, Logan Paul's gonna be a billionaire pretty soon. Honestly, and I hate to admit this. I really, truly hate to admit this, but I'm gonna go ahead and say it. Prime is actually really good. Like, Prime tastes good, dude. It really does, man. Like, their push pop flavor of Prime is so good, dude. Like, I had 2 bottles. I had the moon one, and then I had the push pop one, and they were good, dude. I can't even lie. Like, I'd love to say they were terrible, but they weren't. They taste pretty good. They use coconut water. Like, it's actually pretty good. No, honestly, they actually started asking me about stocks. Like, they were cool. I hate telling people because they immediately think I'm like those Atlas guys. But these guys were actually cool. Once I told them, they started talking to me about Nvidia. The guy on my left, who was he was playing by the book, like, correct BJ strategy. Like, he was playing the correct strategy, and he was helping Carol, the older guy. He was like 70. He was helping Carol because Carol, you know, there were a couple spots that Carol was in where she didn't know, like, if the dealer had a 6, you know, and Carol had like 15, Carol should stand. You know what I mean? Because it's much more probable that the dealer busts, right? Now, if the dealer had a 10 or a king or something, then you need to be more aggressive. And so him and I were kind of helping Carol figure it out. But he was talking to me about Nvidia. He said he got in. He said he bought Nvidia at like the 120s years ago. however long that was ago, and he's still in it. And so I told him he's doing really nice right now. My average entry price on what, Amir? Oh, you might be talking about Tesla. Yeah, y'all can disagree about stuff because y'all have opposing sides, but just make it friendly. All right, like you can take the opposing side of trades without hating the other one. All right, and that's an important thing right now, guys. It really is. Learn to do that. If you can learn to do that, you can be civil with anybody. Just learn to do that. What's up, Lucid? Yeah, I mean, I definitely think that it's possible that we pull back in Nvidia. I'm not saying it will. I definitely think it's possible. I think the PE ratio is just too high. It depends on what the earnings show up as next earnings season. That's going to be the true tell of all of these AI stocks. Is AI influencing their bottom line on a monetary level enough to sustain these prices? Is the real question here. Like, a lot of them are up. The PE ratios are really, really high for these companies, and so a lot of people are speculating that during the next earnings season, we're going to see corrections in price based off of what AI is actually doing to the company's bottom line in terms of money they're bringing in. If the companies are not bringing in more money with AI, then some of these increases from AI might not be justifiable. And I think that's a big story of the next earnings season. We did a short about this a couple of days ago. We said, will we get an AI crash during next earnings season? I'm not saying we will, but it's possible. It's something to look out for. Yeah, all good, Amir. It's all good, dude. Yeah, again, nobody was super rude, but just everybody be nice. Yeah, I like Walgreens. Walgreens is dope. Can someone tell me why Chipotle stock is so high? Chipotle is high because the float is small, Leslie. So the float is small of Chipotle. So like while Chipotle is $2,000 a share, the float is like what, like 50 million or something. So like it's a really small float stock. Like the float is small, and so Apple might be 100 and something bucks, but it's got billions in the float. Chipotle's only got like 30 million, and so it's a much higher price stock with a much smaller float. Like there's less of a supply of shares, and so with that, each individual share is going to be more expensive, but there's less of them out there, so it's still a much smaller company than say like Apple or Disney or Amazon or whatever. It's Chipotle. They're a good company. They make money, and I love Chipotle personally, but they got a very small float out there right now. Yeah, I mean, I tend to agree, Amir, especially with stuff like AMD and yeah, I tend to agree. I think a lot of AI stocks are just up too much, but I think it really depends here, man. I think the next earnings season is going to be huge volatility for us to pay attention to. I really do. I think the next ER is going to be huge for a lot of these companies. It's going to be something that everybody's watching, everybody's paying attention to. And again, we're going to stream it all right here like we always do, man. We stream each one every day live right here. So, hey guys, I need to go put on a sweater. I'll be right back. Sweater break. I need to go put on a hoodie, dude. It is cold right now. Go and grab my hoodie. Be right back. Question: will AI stocks correct during next earnings season in July? All right, so here's my question. Will AI stocks correct during the next earnings season in July and August? There's my question here. I will be right back, guys. Be right back. All right, guys, I'm back. Sorry, it is cold out here, man, in Michigan right now. It is genuinely cold. Oh man, it is cold right now, bro. All right, so we are out here in Michigan right now. Oh man, it is cold right now for sure. Whew. Long blue chips for 5+ years. Weekly RSI Bitcoin bearish divergence. Can you check? I mean, I don't really look at the RSI that much, dude. Tesla just ripped up over 250s. So yeah, Tesla just ripped. Look at Tesla go here. This has got to be catalyst driven. Let me see. All right, so General Mills is out. General Mills is out. 112 EPS versus 106 or 107 expected revenue of 5.03 billion. They expected 5.18 billion. Raised their dividend by 9% to 59 cents per share. So they raised their dividend. I'll put the General Mills up. So beat on EPS, missed on sales, and so yeah, they beat EPS, missed sales, and yeah, they beat EPS, missed sales, and raised their dividend is what they did. Tesla popping up though. I don't know why it's moving up, but Tesla is popping up. I don't know where it's going, but Tesla is moving up a little bit. I don't know why it's up. I'm still looking for this news. But this one, it says Tesla overseas in China is on track to hit record Q2 sales, even as the market share shrinks amid heavy rivalries. Kathy Woods, ARK Invest outshines S&P. AI is not a hype cycle, it's a transformational technology, says Wedbush Securities. Yeah, I don't see anything for Tesla here. Let me look on Twitter. I don't think we actually have any much economic data. All right, guys, Tesla at 251s. Yeah, I mean, I'm a huge bull. You guys know me. Like people make fun of me, but typically what I see on the stream is that people make fun, but I get the last laugh, bro. Like people will make fun of my trades, they'll make fun of my positions, they'll make fun of my dip buys, but usually I'm sitting there saying I told you so, and within a couple weeks, that has happened almost every freaking time. You know, so it's something that people might laugh and make fun, but like I'm there to say I told you so by the end of it. Like, again, I think people who are not bullish long-term are missing out on the biggest, most profound edge the market ever gets you. And they're getting manipulated and they're being gullible to like sensationalized media talking about a stock market crash. I'm not saying we don't crash. I'm not saying a crash is impossible or unrealistic. A crash could very well happen. But I think people who claim we're going to crash misunderstand the natural state of the market, which is that everybody thinks the market's going to crash at any point, or a lot of people think the market's going to crash at any one point in time. And it's actually pretty low probability. Now, again, if you look at what the market is seeing here, so like if you look up the SPY, right, and you put up like a long-term chart, generally you'll see something here, which is that like on the big crashes, they usually start and end on a downtrend, right? So they're starting on a downtrend. We get on a downtrend, and then that downtrend gets worse, right? That's kind of what happens to crashes. Let me extend this time frame a little bit to, instead of 20 years, we'll just do like maximum if we can. Yeah, max available. And so one thing that you'll see on like the big major market crashes is that like the big crashes, like this one, again, they start on a downtrend and the downtrend just kind of gets worse, right? Same thing here. You start on a downtrend and the downtrend just gets worse into the crash, right? So basically what happens in the big ones is that the market's reeling down and then the crash gets worse, right? And so if we look at what we have now, the market is not really doing that as we speak here. So like the market is instead, like we had a little bit of down action. Now, if the market would have continued down like this, that would have been a way different story. So like if the market would have continued down like this, that's when a crash looks more probable, right? But the market has not done that. The market has bounced back. You know, the market's looking more resilient. And so the market is getting close to lifetime highs, all-time highs. And so in that regard, this doesn't look like a crash, you know, and I think us breaking over this 430 level in terms of like crash possibilities looks really good for the market. It looks really good. It's something that we want to see. We want to see strength right now. We want to see resilience. We want to see all that stuff. And that's what we're seeing. Tesla started to pop back up to 250s. Yeah, bulls have much more of an edge than bears. And that's what, again, a lot of people are just sensationalized from media, you know, but like the biggest, most profound edge the market ever gives you is on the upside. It's a very obvious thing for anybody that looks and studies the market. The most profound edge the market ever gives you is on the long side. And if you ignore that and you instead try to take long-term short positions, you are taking the biggest sucker bets that there ever are in the market, which is you're betting long-term on the downside in the S&P 500, which is just the biggest sucker bet you could ever get involved with, to be honest here. Like short-term, you can bet on the market failing. Like anybody can bet on the market failing short-term. And if you have conviction, do your thing. I'm not mad. If I'm wrong, I will certainly admit I'm wrong. And I could very easily be wrong. Maybe I'm wildly wrong here and maybe we do crash. Right. But the biggest, most profound edge the market gives you is on the upside. And we've already actually had a little mini crash. And so it's not like we've already had a drop, you know, like we've already had a pretty big correction in 2020 and 2021. Tesla's still popping up. And so with that, like we've had the little mini crash. Now we're kind of reeling back from it. Well, yeah, but if WW3 happens, we're in a lot bigger problems than what the stock market is doing. You know, somebody said the S&P was going to drop by 80%, you know, like that's not happening. Yeah, Big Papa JP speaks today at 9:30 Eastern Standard Time. We're going to stream it all live. All right, guys. Tesla, man, surged it up. I'm still trying to figure out why. I could see a 20% pullback. Yeah, I mean, 20% at least is like a reasonable percentage. It's better than the 80% predictions some people give us here. Yeah, I'm trying to remember. 9 a.m. Speech. Yeah, so again, Jerome Powell, Big Papa, speaks with the ECB today. Apple needs a pullback. Apple and Microsoft need a real correction. Anybody know why Tesla's moving here? I see mortgage rates. Mortgage rates came out at 6.75%. Pfizer's biodrug, a long-acting once-week treatment for pediatric growth hormone deficiency was approved by the FDA. Hey, what's up, mister? What's up, Chris? Hey, what's up, brother? I bought over 5K in Tesla puts for July 14th as a hedge in case July 2nd numbers crop to bed the cost of insurance. What's July 2nd numbers? So let me see. July 2nd. July 2nd is Sunday. Now, next week we do have some numbers, but I think it's non-farm payroll data in unemployment, I think. I think that's what we got next week. How about those LSU Tigers, guys? How about my LSU Tigers yesterday, man, or the day before yesterday? Without saying your age, say something a young person today wouldn't understand. Not being able to use your phone and the internet at the same time. It's got to be my go-to. Again, without saying your age, say something a young person today wouldn't understand. The dial-up noise when somebody's on the phone, when you're trying to connect to the internet. Report this morning that Tesla's going to hit record quarterly sales. Dow turned negative direction-wise, means sales on the rise. For all of us on to deal with Tesla. Tesla does have the gap down to 235. Yeah. Tesla, July 2nd is Tesla delivery numbers. Okay, nice. Are you swinging space? No. I don't like space at all. Building a treehouse? Oh, dude, I've had some tree houses. Big League Chew, bro, the GOAT. Man, I used to love that when I played baseball. My mom would always buy me Big League Chew. I'd eat it all in like one big gulp and then spit it out. I remember Big League Chew. Rotary phones are easy. I used to watch the Munsters. Yeah. Cable TV. Cable TV's still around. It's just less popular. VHS for Blockbuster, dude. Honestly, I still get a good feeling thinking about Blockbuster, dude. Because it's like Blockbuster, bro. It's like, dude, I can remember all that stuff, dude. There's a lot of nostalgia I have for Blockbuster. I remember going there with my parents. I remember going there with ex-girlfriends. I remember going there with like friends and renting movies, you know. Listening in on phone calls without people knowing when you have more than one phone. Yeah, but my family always knew. I tried to do that. My mom would catch me, bro. My sister would catch me. They'd be like, "Hey, John, I hear you breathing. Get off the phone, dude." You know. So like they always knew. Boy Meets World was good. I used to watch Boy Meets World. My son actually started watching. I actually liked it. Yeah, Tesla looking good though. I mean, it ripped up. It's now pulling back a little bit. We'll see what happens. Apple on the rise too. General Mills did report Apple at 436s. Rolodex. Rolodex is like a OG. Rolodex is like an OG phone storing, whatever you call it. I can't think of the name, but yeah, I know what a Rolodex is. I never had to use one. That was before my time, but yeah. Like an OG phone book. Yeah, OG phone. It was like an OG contacts list is what it was. Yeah, dude, I remember, honestly. I had to wait. I remember AT&T had free service after 9. And so you had to wait until after 9 a.m. to use it because then it was free. I remember paying by the minute on those OG phones. Can someone tell me on options what percentage change means in layman's term? The higher the percentage, the better. Thanks. What do you mean what percentage change means? Percentage change where, Stefan? So percentage change might mean the percentage of changes overnight. It might mean how much you're up or down in the trade or the option. It might be a lot of different things. I'm not sure. It depends on the context. Beepers. Beepers was before my time. I grew up in the 90s. Like I was a kid in the 90s, you know. So I remember like Sega, Zelda, Ocarina of Time, you know. Sega. I remember McDonald's toys, Beanie Babies, you know, Pokemon cards. Dude, I used to slang Pokemon cards at the bus stop. You know. Honestly, dude, what I'm really bummed out about. This is a true story. So I had a holographic Charizard. It wasn't the base one. It was like one of the other ones that's probably nowadays it's probably worth like 5K. But I remember I traded it with a friend of mine and I always regretted it at the time. Like at the time, I was like, man, I'm dumb. I got into one of the worst trades ever. I traded it for like a Japanese Charizard, like a 1990s Japanese Charizard. That same 1990s Japanese Charizard today would be worth thousands and thousands of dollars, I think, right? Yeah. Maybe not. I'll have to find it. I don't see it here. None of these are it. But that same card today is worth a lot of money. No, it's none of these. But I remember I always felt terrible about it. Yeah, so PSA 10 96 Hollow Pokemon Japanese basic gym base set is about $10,000 right now. And I always felt terrible at the time, but in hindsight, it was like the right move to make that trade. I ended up losing it. I don't know. Somebody ended up stealing my Pokemon cards. Probably like I had a party at my house, and somebody stole my Pokemon cards. But I remember that. You will see bid, ask, last, the percentage change. 1% changes it, the higher the better for profit. You're talking about options, Stefan? I'm not sure, man. It depends on what platform you're using, brother. Percentage change can mean a lot of different things. I mean, obviously, it's gauging the percentage change. If you're long, percentage change on the upside is good. If it's a positive percentage change, it's good. If it's a negative percentage change, that's bad, depending on if you're long or short, though. Yeah, I had baseball cards, too. I was really into baseball cards. Yeah, I bought my son some Pokemon cards. You know what I did yesterday, bro? I went and rode horses, man. And it had been a while since I rode horses, but it was fun, dude. And honestly, I was kind of good at it. I'd like to go back. But yeah, we rode some horses yesterday. It was fun. Now I want to buy a horse. Problem is I don't have land, and so I'd have to like put it in a stable in Texas. And like that might be too much work. Powell is speaking today. Powell is speaking today. His speech is specifically titled Discussion with Chair Jerome H. Powell on the policy panel discussion at the ECB Forum on Central Banking 2023 in Portugal. And then early tomorrow morning, he talks with Spain Governor Pablo Hernandez de Cos, but that's at 2:30 tomorrow morning. I'm not going to be covering that, unfortunately. But yeah, aside from that, Powell speaks. How much does it cost to keep him in like a stable for a year? Wait. Yeah, Sonia, please don't no promoting your own content, your own scripts, your own stuff here, Sonia, at all. If you do, you're gonna get banned. All right, coming to somebody else's stream and trying to promote yourself is very bad. What's the word? It's not the most ethical thing, and it'll get you banned and burn a lot of bridges in trading. I'm trying to help you, so please don't plug yourself or whatever. Thousands for a year. How many thousands though? If it's like 2,000, that might not be bad. Full board in Miami is $700 a month. Ew, that's high. Yeah. Okay. Good day to you then. Bad etiquette. Yeah. $750 a month. That's high. Bad form. Yeah, it's just gonna burn bridges, bro. Like again, that's not how you grow or on trading in social media. You don't go to other people's stuff and spam your comments. You know, it's just gonna get you banned. I've seen it all, but it's one of the biggest things that if I see it, I'm gonna criticize it. So just don't do that. Yeah. Bitcoin down, market up. So Bitcoin right now, let's take a look at it. Bitcoin, we can look at this left side of the screen here. Bitcoin down a little bit today. Bitcoin's been on a big run though the last couple days, so it's been doing all right. Yeah, except for Reddit. Yeah, I don't mind paying like $200 to $400 a month. That's fine. That'll be like 5K a year to board, which again might be worth it. I think it would be a lot cheaper to just buy some land, but then I'd have to live there, and I don't want to move from my current house because I like my new house too much, but I can't fit horses. So it's not worth it. I'd rather just kind of pay to go ride somewhere instead of getting my own. Michigan's nice. I've been here for a week and now I already want to buy a horse. You got a slogan, John? Don't sue me is my slogan. Don't sue me. Probably my top 3 slogans of all time is don't sue me. I'm just here to remind you about LSU's national championship in baseball. LSU won the College World Series, and it wasn't even close, bro. It wasn't even close, dude. All right. Dylan Cruz, Paul Skeens, Tommy Tanks. All right. The big boys won. And we had the best team by far, bro. Honestly, the only that game 2 was just a little hiccup, dude. We just didn't have our aces in there, We won the game without our aces, but listen, LSU just your daily reminder about LSU's dominance in college baseball. Ponies? Oh, I'm good. Did you move to Michigan? No, man. My mother-in-law lives here. I'm not. Look, I like Michigan. I'm not going to move here, though. It's got pros and cons, right? Like, again, from somebody that lives in Texas, I'll tell you the pros and cons. Worse infrastructure here. The roads are worse, much worse. Things are more kind of. Things are not as kept up here. It looks like. Roads are worse for sure. At least where I am. But pros and cons. I do like the area. I like the farm area. Maybe it's just where I am. It could be just where I am. Yeah, it's cold. Better enjoy it because they can't do it in football. Honestly, bro, LSU's football team is pretty good. We got Daniels. We got Coach Kelly now. Don't hate on LSU football, bro. LSU football is doing better than most other football teams. No, we're not better than Alabama, but we might be this year. We could win it. Honestly, we've already won women's basketball championships. LSU won women's basketball last year. We won baseball. Now the next one for the trifecta is football. And LSU's coming for that too this year. We got Coach Kelly. We got Daniels running QB. We got this next year. Do you tell people when you get in? First time here? No, I don't. I mean, you can see me enter positions, but I certainly don't want anybody to copy me at all. Like, I am not an investment professional. I am not liable. If you lose, I might have no idea what I'm talking about and be wildly wrong about anything and everything I do or say. Do not copy me. Not an investment professional. Don't sue me. Okay? Do not copy me. Hey, what's up, Architect? Nvidia getting dumped. Yeah, I see Nvidia dropping. Nvidia pulled back, but it's up so much. Like, again, if you look at a 180-day chart for Nvidia, like, this pullback is pretty minor, considering. I mean, it's not going to go up forever here. Look at the long-term chart for Nvidia. This is a 180-day chart, 6-month chart. 400 seems to be a pretty big psychological level. No, I don't mind a little dip buy to that level. SPY pulling back a little bit. Let's go ahead and buy some up. We did make some money yesterday, too, on Top Step. Pull up Top Step. Yeah, no worries, Rodriguez. Yeah, I mean, my channel, brother, is I'm just not a professional investor, man. I'm not trying to be. I'm not selling courses or selling stock picks, bro. I'm just, what we really do is we cover economic news and stock market news. So we cover economic data like CPI, PPI, jobless claims, retail sales, Jerome Powell, FOMC meetings. Today we have Jerome Powell speech, or really it's a Jerome Powell ECB interview discussion panel today at 9:30. So it is 7:30 now. So we still got about 2 hours. I'm going to put a timer up on the screen as well here so you guys can kind of see when Big P is going to be doing his speech today. So again, right now it is 7:35. So we've got about an hour and 54 minutes. There we go. All right, so here's the timer. This is when should I call him Big Papa or Big Poppy? Either way is good. Tesla bouncing up a little bit today. I'm kind of tempted to buy Nvidia right here. I can't even lie. I'm going to buy a little bitty piece of Nvidia, just a small piece. It's got to be small. It's going to be like 10 shares on this dip. All right, we're in 10 shares of Nvidia. Just 10 shares. I don't want any more than this. I just want 10 shares. We did make some money yesterday on Top Step. Yesterday we made a cool 550. 600 bucks yesterday. Not bad. Not bad. We're doing this. Oh, I got to do a poll. You're right, bro. My bad. I appreciate it, guys. All right, so it's Jerome Powell speaking with the ECB today. Will the market react positively or negatively to this? Bull reaction is going to be poll option 1. Bear reaction is going to be option 2. Neutral reaction is going to be option 3. And then I don't know, it's going to be option 4. All right, so there's the poll, guys. Hey, what's up, Tony? All right, Nvidia did bounce a little bit. I want to give it time, though, to bounce a little bit more here. Disney's looking really good. I'm basically flat on Disney right now. We're down a little bit, but not much. We're going to let Nvidia try to run. Today's going to be trading range day. We'll see, bro. We'll see. Y'all do me a favor. Hit the like button. If you haven't already, hit the notification bell. I appreciate the love. Today we do have AMD. Or no. We have MU earnings today. I actually bought SOXS. It's the same time you bought Nvidia. Hey, good luck, Joe. We'll see who's right here. Again, I made some money on SOXS not too long ago. Yeah, but I got a very tight range. Like, we dip under that, I'll cut it. I'm not going to lose much on this trade. I was in Delta Airline calls and only took 200%. Hey, nice, man. Good trade. 30% of Nvidia business comes from overseas. Yep. Wasn't food for chips when US said it's looking to close loopholes supplying them. Yeah, maybe. J Powell will jawbone us today, maybe. Yeah, J Powell, third time in a week, dude. Honestly, is it the third time? I mean, I know he did the FOMC meeting. I think that was over a week ago, right? That was... I'll have to go back and check when this was, dude. I know what we're going to hit today, though. Today we are going to hit, without question, 110,000 subscribers. We only need about 115 left. Can you move the poll out of the comments? Yeah, somehow. Just dismiss it, man. All right, so SPY dipping down a little bit. Yeah, so yesterday we netted about 434, a 434 net. ECB is the European Central Bank. Your channel should keep on growing. Not many traders on YouTube that don't push crap on their viewers. I mean, I push some stuff to my viewers. Like, we have sponsors. Don't get it twisted. Like, we have sponsors. The difference between me and everybody else, though, the main difference here is that, number one, when I plug a sponsor, I tell you realistic views of the sponsors, right? That's number one. Number two is I don't sell a course. I don't act like an expert. I don't want to be a guru. I don't charge for content. Like, all the content we drop is free. And so, like, whether you choose to buy some of our sponsors is purely up to you. It's not going to interfere with you consuming the content that we put out regularly, right? Like, that's my big thing. It's like, I don't sell a course. I don't act like an expert. I don't want to be a guru. I think when you act like a guru, you got to fudge your numbers, and I don't want to fudge my numbers. I'd rather just be honest about everything. And so I don't sell content. Like even becoming a member on my channel, it's just like, you don't get anything extra except for like extra emojis. Like, you can use these coveted emojis right here, like Beardless John, Carol, and Rosie. You can also use Good Day, Sir, Don't Sue Me, top 3. But that's about all you get for becoming a member. It's just a way to help support the channel. Like, there's no extra content that you get for it because we don't sell content. I don't want to have any paywalls behind my content. Now, with that said, though, we do have affiliate links and sponsors that we plug regularly. But I mean, anybody's going to do that. But each time I plug it, I'm an outlier in that regard as well, because each time I plug it, I always tell people, hey, I'm biased in their favor. If they pay me money, I'm biased in their favor, of course, which I think is the right move. But that's the difference. And I do pick the 3 sponsors that I have very carefully because I genuinely like the 3 sponsors that I have. I genuinely use them and like them. I think they're good for traders. Yeah, I've had bulletproof coffee. It's okay. Put some butter in there. All right, so looking at our poll numbers here, we got about 75 votes already in less than 5 minutes. 28% think we're going to get a bullish reaction. 37% think we're going to get a bear reaction. 14% think we're going to get a neutral reaction. And then I thought I had an I don't know option in here, didn't I? Yeah, there we go. 19% said I don't know. Hey, I respect the 19% that admit they don't know. All right, guys. Yeah, we're still in Nvidia. All right, so we're flat on Nvidia. I don't mind this trade, but I'm not going to take large positions here. I could also buy the SPY, and I'm looking at a SPY dip possibly here. Let's see if we get it. I'm taking some positions here on the SPY. Kind of attacking that upward trend here might be okay. Let me pull up Chart Prime. Again, I've been using Chart Prime a ton with my trading, specifically yesterday. The SPY 5-minute chart. There we go. There we go. I like that. Okay, cool. What do we got recent today? Oh. Gotcha. Okay, we might actually been in the middle of a wrong trend here. Yeah, we took one little trade on the micro E-mini. We're down 1250 on it though. I want to give this time to bounce. This is basically the SPY. All right, we're flat now. All right, so you see we're break even here. I want to see if Nvidia bounces up too. Yeah, I'm gonna go ahead and cover this. The reason I'm covering this is because I actually see there was actually a trigger for a downward trend in the Nasdaq that I would love to take advantage of here. So I'm gonna take 4 contracts of the Nasdaq. Look at the downward trend work, bro. I'm telling you, dude. Chart prime. We got the signal. I'm gonna go ahead and look at this, man. I got the signal. I'm gonna go ahead and take one off here. Again, chart prime, incredibly impressive, dude. Incredibly impressive. Again, they're a sponsor of mine, and so I'm naturally biased in their favor, of course, because they pay me money. But again, genuinely impressive. I saw the Nasdaq and the SPY downtrend. Specifically on the Nasdaq, I saw the downtrend plus the engulfing candle. So like my favorite thing to do is find an engulfing candle and a down or in a trend reversal on chart prime. And chart prime is a trading view indicator service. You can use it in stocks, crypto, forex, futures to show you what I'm doing here to get this signal. Here's my chart on chart prime, and you can see on chart prime, bro, you can put so many different stuff up. The big edge, guys, again, is when multiple show up together at once. So like if you want to look at what I'm seeing here, I see the reversal down signal here mixed with the bearish engulfing candle on a 5-minute chart. That's usually very powerful for a downtrend prediction. Again, you can kind of see it here. Same thing. Reversal down, drops. Bearish engulfing candle, reversal down signal here, drops. Possible reversal up and a bullish engulfing candle, bounce. And so every time you see an engulfing candle and a reversal signal, that's usually very powerful. And again, chart prime, you can look at chart patterns. They show you triangles, flags. You can look at like smart money concepts too, and like so much other stuff. Like this is just a small piece of what they offer. Like if you look at oscillators, smart money concepts, patterns, so it'll show me triangle, flag patterns, all that good stuff. And again, it's 35 bucks a month. It's very, very cheap. And so this is what I'm using right now. You can see my other trade. We're going to go and take another piece of this off, another half, lock that in. And yeah, honestly, I should have taken a larger trade, but that's okay. But chart prime, man, just powerful. And this is the Nasdaq, so I can use it on stocks, crypto, forex, futures, whatever I really want to use it on, I can. And I'm going to go ahead and take the rest off there. Just lock that in. So genuinely impressed by it. But again, they are a sponsor of mine, so I'm naturally biased in their favor because they pay me money. But I'm going to keep using it. And again, if you want to check out Chart Prime, you get it it's like $34.20 is what you get at Chart Prime for. Here's the link if you want to check it. Jerome Powell, Big Papa, is speaking with the ECB panel today. We're still in Nvidia. Well, futures are just more freeing than options, Tony. So like options, you're restricted. You gotta be exactly right. You got a time limit in options. You've got different conditions. Futures is more in line with just trading stocks is what futures are. So like futures, you can buy and sell futures whenever you want. You're not restricted by like maximum time to hold or anything like that. Options have their purpose though, for sure. Like options are very useful as well, but it just varies. Like there's pros and cons to each. But yeah, I think I told you guys this, bro, yesterday. A couple days ago, dude, we were playing wiffle ball. I'm gonna go ahead and tell the story again because it's honestly a funny story. But the other day we were playing wiffle ball, and if you guys don't know wiffle ball procedure, right? So in baseball, you tag them out with the ball. In wiffle ball, you throw the wiffle ball at them. So in wiffle ball, you peg somebody with the ball to get them out. If they're not on base, you hit them with the ball, they're out, right? Kind of like dodgeball, but you peg them with the ball to get them out, right? And so Carol was trying to run. Carol hit the ball, and she was running. She was getting greedy with her base running. So she was trying to run from second to third. And my daughter and I have been playing catch since my daughter was like 4 years old. My daughter's got an arm. She's accurate. Carol tried to steal third. And my daughter from like 4 feet away just hums this ball at Carol. And my daughter, I taught my daughter the right thing, which is that you throw it at their head. You throw it at their face. Like when you're playing baseball, you throw it at them, and they can use their glove as a shield, right? But my daughter's never really played wiffle ball. And so her instincts kicked in and she just hummed the ball at Carol. And bro, that ball hit Carol right in the face, like right in the nose, very fast from like 4 feet away. And Carol, at first I thought Carol caught it, but Carol looks up and goes like this. And then we see just blood gush from Carol's nose, dude. It really reminded me of Meet the Parents. Like the volleyball scene in Meet the Parents is what it reminded me of. And then Carol immediately, we're like, oh no, Carol's nose is broken. Blood just starts spewing, leaking everywhere, and it was just chaos for 5 minutes. Maddie feels horrible, so Maddie's crying, even though it wasn't really intentional. And eventually, it settled down a little bit. We realized that her nose isn't broken. Her nose is straight and not broken, but it's still a little sensitive. So, man, Maddie got an arm, dude. The rest of the day, we were kind of messing with Carol. You're saying, man, Maddie got an arm. Shouldn't have tried to steal third. But that's how it goes in wiffle ball. There's no crying in wiffle ball, they once said. Famous person once said. I think it was Abe Lincoln once said, there's no crying in wiffle ball. Abe Lincoln. Yeah, right in the face, bro. It was bad, dude. It was rough. Just got her. Yesterday, I got off of Delta Airlines at only 80%. It runs 340%. My confidence is building with the amount of money I keep making. I'm growing a self-loss. Hey, nice, Tony. And keep making your money, brother. All right, so we are in Nvidia. Again, we're not going to lose too much. But again, sharp prime indicators, dude. Genuinely impressed. Because again, they called this downtrend too. And my daughter's latest obsession is Elvis. What an obsession. Elvis, bro. Freaking Elvis, dude. I tried to tell her, I was like, look, I like Elvis. Elvis is cool. But I told her, I was like, look, you're going to listen to Elvis. And then as you get older, you're going to realize that Elvis is just the boy band of the 50s. And then you're going to move on to Johnny Cash. And you're going to be like, yeah, Johnny Cash is it. And then that's going to be the natural progression here. You're going to go from Elvis, and then you're going to realize he's kind of a poppy boy band guy. And then you're going to move on over to Johnny Cash, the real OG, who has much better music. And that's going to be your evolution, Yeah, check out the description if you want the link. Again, check out the description. You can get 40% off if you use my my link. Good morning. Hey, Cap. Hey, buddy. Hey, Cappy. All right, go see. Good boy. All right, so yeah, if you want Chart Prime, you can see the link in the description. It says 40% off. You can also use promo code BTRADE if you want to get 40% off. I don't know, man. I'm still on Elvis and I'm 36. Of course, I like Johnny Cash too. Yeah. I disagree. Yeah, more of the story, baby. Thank you, John, for the commitment to host this program. Hey, all good. Antonio, thanks for the support, brother. All right, so I'll probably end up cutting Nvidia pretty soon. I bought the dip. I like the dip. I'm down less than $10. I guess I'll let it see if it holds 404. I don't mind the pullback. I think the pullback's big, and I think it's down a lot. And so generally, I think we might have some extension on the downside now, and maybe we'll get some upward pops. But again, we do have Big P, Jerome Powell, speaking at 9:30 today. That might influence everything as well. We'll see. Yeah, Elvis was all right. He's too poppy for me. Like, again, if teenage girls are really into him, he's too poppy for me. If he's just pandering to teenage girls and like women, I don't want to have much to do with that. That's not the type of music I like. It's a crummy stat, but true. Sober people make terrible music. Maybe. I mean, I think there's a thing. So, cannabis, right? Like cannabis, one of the big things that you hear a lot is that cannabis causes short-term, attention problems. Like it causes memory loss, short-term, not long-term memory loss. Like it doesn't make you forget what you did in your childhood or anything like that. But cannabis causes short-term memory loss. So like when you consume cannabis, you'll forget what you do when you're on it sometimes. It's not that you'll forget what you do. Your memory, you just won't be able to remember things as easily that you do when you're inebriated from it or whatever it is, right? And they think the reason artists and like musicians like cannabis is because when you're not on cannabis, right, your brain is analyzing what's significant enough to store in memory locations in your brain, like heavily. Like it's constantly analyzing, saying, hey, is this important? Is this important? Do I need to store this? Do I need to store this in my brain? Like, do I need to remember this? Basically, the theory is that when you're on cannabis, your brain does not do that as much. Like your brain does not analyze saying, hey, is this important? Is this important? As much. Of course, it always still does it in the background to a certain extent, but it's less heavy on that when you're on cannabis, right? The theory is, right? And so what that means is that it allows your mind to wander a little bit more, focus less on remembering things, and instead allows it to wander and be more creative and think outside of the box more, which in theory is why musicians like cannabis, because it makes you more creative to a certain extent. It helps them write music, it helps them play. That is one of the big theories regarding cannabis, that a lot of scientists believe and think that's true. Again, I don't know for sure. I'm not really a big, but that is one of the theories of why musicians specifically like cannabis, And again, people can dislike cannabis. I understand. I'm not here to judge either way. What I will say is that if you're one of those hardcore anti-cannabis people, it's pretty highly probable that your favorite musician consumed it. And so you can not like it, but your favorite musicians probably consumed it. And so, but yeah. Yeah, I like 9 Inch Nails. Yeah, let's not push the C word here. That's not what we're gonna push here. And there's a huge difference between cannabis and that, and if anybody at home can't see the differences between like a super hardcore drug like that and cannabis, then they're just ignoring facts and realities. Yeah, in Michigan as well, Icky. So we do have Tesla bouncing up. It's at 251.60s. Nvidia at 475. So again, I'm in Nvidia, and don't worry, I'm not consuming it. I get too like I'm not saying I never have, but like I always was kind of like a paranoid person, and so it just didn't work out for me. But yeah, Nvidia at 404.75s. Yeah, I know he is, but I don't even want that there. Yeah, I mean, alcohol is obviously and objectively more harmful than cannabis, like both on the effects, the inebriation levels, as well as the negative effects on your body. Alcohol is far worse, without question. Not even really arguable, I think people are just more used to it, so it depends on what they're used to, but everybody's different. Again, Tesla holding here, bouncing a little bit. I want to see if Nvidia does. Again, Nvidia at 404s. Tilray, yeah. Yeah, I've been watching cannabis stocks too. That's why ECB talk about it a lot. I was big watching cannabis stocks like Tilray, ACB, Aurora Cannabis. There's a lot of cannabis stocks that I've been watching, but most of them have faded into obscurity because of legalization efforts slowing. ACB was another one, APHA, which I don't know if some of these are even still around. SNDL, Sundial was, but a lot of these have just faded into obscurity, unfortunately. AMC at 4.9s. GameStop, what's GameStop at right now? GameStop at 23.50s. Yeah, Jerome Powell speaks today at 9:30 Eastern Standard Time. So Powell speaks today at 9:30 with the ECB panel, a discussion with the ECB panel. He also speaks tomorrow morning at 2:30, but I'm not going to stream that. But he speaks in Spain, I believe, at 2:30 tomorrow morning. But again, I'm not going to cover it. It's too early. What do you expect from Powell's speech? Is he going to be strict with 2 more rate increases? I don't know. He might give us some indications on what he might do for the next cycle. I'm not sure, though. You never really know. We're just going to have to wait and see. Yeah, I mean, you're doing better than I am, Joe, at this point. You're definitely doing better than I am. We were up a little bit at first, but now we're down about 15 bucks. And it's all right. Again, I'm letting mine test 404, and if it can't hold, it's okay. We'll just cut it. What are you talking about, America? I'm not sure what you're talking about, man. He is in Europe. Yeah, Powell is, I believe, in Portugal right now. I'm pretty sure is where Powell is. So Powell is in central Portugal. He's going to be speaking at the European Central Bank Forum, at the ECB Central Bank Forum on Central Banking 2023 in Portugal today. And that's what we're going to be covering today at 9:30 Eastern. Right at the opening bell is when that starts. And again, we're going to cover it live. Yeah, all good, Joe. Okay, gotcha. Hey, what's up, Beach Bum? Yeah, enjoy it, man. Tomorrow, Spain. Today, Portugal. Yeah. What's up, Cappy? Hey, bud. You want to see Cappy? Come here, Cap. Come here, buddy. This is Cappy. Cappy's cool. Hey, bud. You're a good boy. All right, guys. So yeah, there's Nvidia at 404s. So Nvidia testing 404s. Now SPY bounced it a little bit. I want to give it time, but again, if we break under 404s, I'm just gonna have to cut it. I'm just not gonna want it if it breaks over 404. If it breaks under 404, I have just too much risk. It's right at 404 now. We'll see if it actually holds. Yeah, this is Cappy. He's cool. Hey, bud. All right, dude. I'll see you later, buddy. Yeah, so Jerome's speaking today. Big news for today, man. Again, Jerome's been speaking a lot this week. All right, so we're right at 404 for Nvidia. I could add some more to it. We're down like 14 bucks. I'm going to add 5 shares and take one more little swing here for this. Try to fix my average a little bit. Yeah, it looks like we're immediately going to cut this thing. Okay, there's a little bounce of 404s. We'll give it a second. Still got a long way. We got to get all the way up here to make money on this, though, over 405. So it's not looking the best. Yeah, I'm going to go ahead and cut this. I just don't like it. So we lost 20 bucks. Pretty small. But that's it for today. John, if you had to guess C3 AI hitting 30 again or 40 again first, where's it at right now? Let me take a look. I mean, if I had to guess, I would think it's going to hit 30 first. But it depends on how much this slowdown affects it. Like right now, we have slowed down a lot. So again, you can kind of see we're chopping back and forth through all this right now. We got kind of like a sideways consolidation over the last couple days. And so 30 is right here. It depends on if we hold over this level. This $32 level seems important. No, all good, Joe. It's a $20 loss. You did great, so congrats on yours. It's all good. Again, I understand. Like I'm actually still green on the day in stock trading. Um, I'm not green very much, but like my Disney trade is up enough today to where I'm still green. I'm also waiting for my money to settle in MooMoo here. Do you ever worry about the wash sale rule when trading or trade around it? No, not particularly, no. Is there any foreign AI company worth watching? I don't know, chat. Chat might know better than I do there. Public service announcement: when you're 40 years old plus, playing b-ball with mid 20-year-olds, don't roll an ankle. Just hopping around being old isn't fun. Hey, sorry to hear that, man. Yeah, isn't the president speaking today too? If I remember correctly, I think the Prez is speaking today now. All right, so we are gonna get this ready. We are gonna get this ready. New stream title. All right, so yeah, we're getting this ready here, guys. Bear with me. Yeah, so we did actually get a pop back up here. I'm still kind of waiting to see if all right, team. All right, guys. So yeah, we are getting ready for Big Papa Jerome Powell's speech today. Press conference. We do have Big Papa speaking today. Let's see. We got Powell live. Fed. So remember, it is Powell's going to be live for a discussion with the ECB today. Nothing important at 8:30? No, not really. It's 9:30 is the big thing. There's no economic data today at 8:30, I don't think. Let me check. I'll be sure. But I'm pretty sure today's light on economic data. Tomorrow's heavy. So today we had, nothing really. We got the good trades balance and core retail inventories today, but that's very small release. So we'll cover it. We also had Nvidia mortgage rates come out at 6.75% today versus 6.73% expected. Yeah, for sure, Varen. I like Disney too, man. I think Disney's going to do fine. Maybe not, though. Who knows? But we're up nicely today. We're up to, we're nicely green. Yeah. Yeah. So tomorrow we have GDP, and then Friday we got PCE. Also, guys, if you haven't already, check out MooMoo. MooMoo is really, really dope as a platform because what MooMoo allows you to do is MooMoo gives you free stocks if you open up an account. And again, I am switching. I finally wired my money to MooMoo this morning. And so we're going to be day trading actively on MooMoo over the next couple weeks. And the reason I am going to be switching to MooMoo from TOS is simple. Is because I can actually fully trade in pre-market. Like I get up at 5 a.m. my time, right? But I can't actually day trade until 7 a.m. market time, which is just way too late, And again, MooMoo lets me trade the entire pre-market session. Their platform is really powerful as a platform. Like it's really nice. You can see they give you a free heat map. So yesterday, Nvidia big, semiconductors were up a lot. Meta was up, Alphabet was down, Microsoft was up, Oracle was up. So software had a big day yesterday. Consumer electronics had a big day yesterday. Semiconductors did as well. Banks, software, telecom. You can kind of see the different heat maps. You can also see the hot stocks in pre-market, after hours, IPOs, overseas, comprehensive rankings of stocks. And so it's just a really good platform, to be honest, a really good platform. They do free paper trading portfolios to where like you can see like the best traders on their platform, what trades they're getting in. There's just a lot of really cool resources for MooMoo. And the real reason I'm using them is for their news sources here. They have some of the best news sources in the game. You can look at the calendar here as well and just get a lot of really cool stuff from them. Earnings calendars, all that stuff, IPOs, divvies, economic data. So like it's really my type of place. You can build watch lists, see the different headlines. And if you open up an account on MooMoo and deposit at least $100, you get 5 free stocks. So, in terms of percentage, you're at least going to get 5% minimum, probably more than that. You open up an account, you deposit over $100, you get 5 free stocks. You open up an account, deposit over $1,000, you get 15 free stocks. So you get the previous 5 plus another 10. You open up an account, deposit over 5K, you're going to get 15 of the previous free stocks plus a free share of either Google or Tesla. And so pretty good deal here. Great platform, 0 commissions. So 0 commission stock and options trades, and just one of the best platforms in the game right now. And so if you want to check it out, great way to help support the channel. They are a sponsor of my video. But again, there's reasons, there's big reasons why I'm moving over to them, to be honest. There's big reasons here. And again, if you want to check them out, here is the link. Great way to help support your boy here. Got MooMoo right there. You can also find the link in the description. I will pin this to the top of the chat. And yeah. Socks are mysterious. Mythical almost. You can't trade options in pre-market, no. Option trading is universally only done during market hours from 9:30 to 4. Oil stocks change come in around 10:30 today. Yeah, we have crude oil inventories. So for all my baseball fans, what happened to Alek Manoah? He's getting owned in AAA too, man. What happened to Alek Manoah? Yeah, all my baseball friends. What happened to Alek Manoah, man? We got ISM manufacturing PMI on Friday. We got durable good orders. So yeah, next week, I'm looking at next week here. Next week, we got manufacturing PMI, non-farm employment numbers. Wednesday. Thursday, we got non-farm payrolls and unemployment. Yeah, but one of the reasons I think he needs to get in shape, one of the reasons he's such a good pitcher, though, is because of his size. It's kind of like if you look at LSU's baseball team, right? If you look at LSU's pitchers, they're all huge, man. Look at Skeens, bro. Skeens is like 7 feet tall, man. Huge. And then you got the closer. What's the closer's name? What's the bullpen guy? He's like a thick dude, big thick dude at LSU. You see Acuna yesterday? No, I didn't watch. Yeah, it's not even AAA. Yeah, he's getting owned by 18-year-olds. Yeah, I heard. It's rough, dude. He was an ace last year, too. He was great. Got paid, got lazy. Yeah, that's what it is. There's a couple options here. Like, if you look at Alek. So, Alek relies on 4 different pitches. He has a sinker, a slider, a fastball, and a changeup. He mostly throws the fastball, which average miles per hour is about 93. So it's not like a super fast fastball for the pros. His slider is about 81 miles per hour. So his slider is medium speed. His changeup's 86. I think people are just, I think after a while in the pros, they're going to start studying your pitches. And once they start studying your pitches, some of like opponents start to train for you, right? They know what you're going to throw. They know what you're good at. They know what you're going to do. And once they start training for you, sometimes pitchers do really, really well. And then everybody learns how they pitch. And they just kind of sit on, they sit on the changeup, or they sit on the slider, or they sit on the fastball. And then once that happens, you might have big, losing streaks like Manoah because they learned his style. Yeah, I'm not trading the overseas market beetle, so that's just not my style of trades. All right, guys, we got about an hour left. Market's roughly down. Nvidia doesn't look bad anymore. Part of me might buy Nvidia here again. We'll pull it back to the VWAP. I'm gonna go ahead and take 10 shares here. I don't hate this. We still got some time. All right, I'm gonna take 10 shares right here. So we bought 10 shares of Nvidia. We'll see if this holds. I want to give it some time. Yeah, I mean, listen, I might have talked about baseball for what, 2 minutes. I'm not going to be able to talk about only stocks for 5 hours, guys. It's not a reasonable expectation of me. We might pivot over to baseball for a second. We might pivot over to whatever. We did get a little bounce here in Nvidia, though, so we did get a little pop. I'm going to take profit pretty quickly on this and just kind of lock in the gains if we can, but I'll give it a little bit longer here. But we're green already. We got initially a green trade. I don't know. I'd have to check what my profit is on TOS and futures. We'll break even today, but if you look at this last month on futures, we are up about 4,000 gross in futures, about 4K gross. on Top Steps Combine. We're trying to get funded, but about 4K. One of my favorite things with MooMoo is the block sale buy alert. Once a large share size hits the ticker tape for stocks in your watch list. Yeah, they also have unusual options for free on MooMoo, which is like a monthly subscription anywhere else, I'm pretty sure. Yeah. You support a business if you want them to succeed because you want to think they will go to IPO or they will sell for a good price. Yeah, I mean, I get it. I understand supporting businesses. I just think in stocks, like the businesses you want to support are going to be large blue chip companies. Like a lot of new traders fall into the trap of like investing in really speculative, obscure penny stock companies that are hyped up on social media. And that's one of the easiest ways to lose a lot of money in the market. Say it's rigged or manipulated and then just give up. Right. Like if you look at how many people start trading and then give up within a year, most of the time it's because they get talked into buying these just crap companies by these influencers. They just push these terrible penny stocks on them. They tell them they're going to 1000x and they're going to go up 1000%, guys. And new traders eat that up, man. They don't know any better. They don't know the bad. They don't know the red flags to watch like experienced traders do. And so new traders eat that up, and then they end up investing in just crap companies. They end up losing money, and then they say, oh, the market's rigged. The only people making money are the big boys, which is not true at all. Like the people that are making money are buying up healthy blue chip companies and sitting on those. They're not buying up obscure, terrible penny stocks. And like that's what happens to most people is they buy up crap when they first get started, and then they lose, and then they wonder why. So if you want to succeed, I mean, to be honest, the easiest thing to do is just to diversify into blue chips and sit. It's their first real relationship, yeah, with stocks for sure. Yeah, so it's 9:30 Eastern Standard Time is when 9:30 Eastern Standard Time. Slider is about 81 miles per hour on average. Yeah, 23 Manoa is 1-7 with a 6.36 ERA. That's bad. All right, so Nvidia popping back up a little bit here. We are green on this last trade. Now, I want to give it time. I mean, we'll see if it gets over 4.4. The volume weighted average price is pretty low down here as well. So, you know, it's arguable that we might bounce here on this pullback zone, like on this volume weighted average price level. It is arguable that we could bounce there. Disney's still looking really nice today, up to almost 89.30s. Nvidia at 404s. So we're going to see if this thing continues to rise. Right, announced bankruptcy. So many people are getting dragged into that stock. Yeah, I never was like a big believer in Ride. Can Powell's speech affect the market? Sure it can. Yeah, those are pretty slow pitches. I think they just sit on those. Mullen back down to 13 cents. Yeah, Mullen's just kind of a shady, scammy company, to be honest here. They have a better chance getting 100x in crap coins. Yeah, for sure. Yeah, let's see what Bitcoin is. So SPY's starting to bounce a little bit. Nvidia up there too. Again, I want to give it that time to bounce. Here's Bitcoin. Oh wait, isn't that Bitcoin ETF live? What's the symbol for the BTC ETF? So here's the SPY. What's the symbol in the BTC ETF, the new one by BLK? No, it's not MBTC. That's the futures contract. Yeah, the ETF. No, I didn't see the sinker video. Who I really feel for is Trout, man. I think Otani's the GOAT right now, though. But yeah, what's the new BLK ETF? What's it called? It's like BITX is what it is, actually. So yeah, this was the first couple days of the Bitcoin ETF. It's just a little slow. No volume, really. I guess Bitcoin not moving much. Bitcoin down to 30K here. So Bitcoin dropping some. And you look at the SPY. SPY is slightly down today, but it's just been such a strong couple weeks. I genuinely don't understand why crypto is going down so bad right now. I mean, Bitcoin's over 30K though, bro. You know, so like, if you look at it, if you look at like a 20-day chart, even a 10-day chart, Bitcoin's up dramatically here. Again, I think people have unrealistic expectations for price move. You know, because it's like stocks can go like this, and then when it pulls back like this, they're like, "Hey, I don't know why that's happening." It's like, well, it's not going to go up forever. You know, it's not just going to go up forever. This thing was under 25K, so being over 30K is great right now. Look at a 20-day chart. This thing was under 25K. It was at 24.8K for a while. So being over 30K is great right now, even if it doesn't hold all the way up there at 31.5. We're getting some nice price action and movement here. We're still in Nvidia. So guys, we still got about an hour. Yeah, to be honest, friend, this isn't the first time. Yeah, it's actually a little cool up here, Martin. I'm in Michigan right now, so it's a little cool. Friday's big for sure. Friday we have PCE deflated. Tomorrow we have GDP numbers, jobless claims numbers. A lot of big stuff dropping today and tomorrow. But yeah, friend, I've heard that so much over the last couple months. Over the last year, I've heard that, and very rarely is it true. I think people just but yeah, again, I very rarely think I very rarely think that the market's actually going to crash. I think crash predictions are very difficult to be right about. I think a lot of people think that, you know, we're always about to crash. If you look at the constant state of the market, a lot of people think, you know, we're about to crash all the time. They think we're just constantly about to crash. And again, it's very rarely true. I mean, most of the time, it's just not how it is. All right, guys. So yeah, Nvidia is still pretty flat here. I think a lot of people are waiting for Big Papa Jerome Powell. Yeah. I think a lot of people are just waiting for Jerome Powell to speak. Good morning. Yeah, but there's Nvidia dipping down. Maybe we'll cut it again. I mean, we're basically flat on this one. But I think Nvidia, we gave it a chance. We ended up losing another $7. Powell speaks at 9:30 Eastern Standard Time. Yeah, man. I mean, I think again, I think the crash predictors are usually biased and influenced by political, by political bias. I think is what it is. I think like a lot of them maybe dislike the administration or whatever, and so they want it to crash so that the administration looks bad. A lot of them are just getting manipulated by election seasons, right? So like during elections, again, the way I always explain it is this: is that over the past year, prior to the last 8 months, the dollar was pushing up really, really heavily. Inflation was very high. The dollar was ripping up. Inflation was high. And so what were the analysts saying at the time? Analysts were saying, oh, no, the dollar is up too much. Inflation is so high. The dollar is pushing up way too much. It's the end of the world. The dollar is up too much. And all the retail traders were eating it up saying, oh, no, inflation, the dollar is bad. Blah, 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 blah. Starting 8 months ago, the dollar started to contract heavily, started to pull back heavily. And so what do the retail traders and analysts say then? They say, oh, no, the dollar is crashing. It's the end of the world. A crash is coming. And so it's like no matter what, that people sensationalize the market. The only true statistical edge that the market ever gives you really is that long term, it's going to go up. Like the S&P 500 is going to move up long term. Now, in between there, you're going to get crashes, you're going to get pullbacks, you're going to get bear markets, you're going to get bull markets, all that stuff. But when you zoom out, it's going to go up. And that's the only true statistical, like profound edge the market ever gives you. But for whatever reason, like big banks put out sensationalized media and they talk a bunch of retail traders into missing out on the biggest edge the market ever gives you. And who's riding off into the sunset? The banks. The banks are the ones really making money on these huge bull runs like we've had over the last 8 months. The banks are really the ones benefiting from this, but they're talking retail traders into being, everybody wants to be Michael Burry. Everybody wants to predict the next big stock market crash. They're watching The Big Short and they want to be Michael Burry. But the problem is that they don't understand the market like that. And so it is what it is. But I hear people predicting crashes constantly, and maybe we do crash again. Maybe it happens. I don't know, but I don't put too much weight in it. Yeah, and again, I'm not against bears. Like I short the market all the time. I'm just not betting long term on the downside. I think that's a sucker's bet that naive retail traders take. Any reports now at 7:30? No, so 8:30 didn't have any reports. We had a couple things. We had like today we had, what do we have today? We had today we have we had good trades balance come in a little bit better than expected at 91.13 versus 92.9 billion expected. We got core retail inventories coming at 0%, wholesale inventories coming at minus 0.1%, but none of these were big market influences. Like these aren't going to move the market at all. Again, the big move of the market is when Powell and Lagarde speak in about an hour, a little bit less than an hour. All right, guys, so All right, guys. So today Powell speaks with the ECB to discuss the economy. Make sure this is right. Yeah, this is right. All right, good. All right. So yeah, Powell speaks today to discuss the economy. We're going to do a Twitter poll as well. So if you guys want to do me a favor, vote on this Twitter poll with me. Will he be dovish or hawkish today? We're going to be dovish or hawkish. If you don't know what dovish or hawkish means, dovish means an expanding monetary policy. Hawkish means a contracting monetary policy, a more restrictive monetary policy. Yeah, so today, Big Papa Jerome Powell speaks with ECB. You can vote on that poll right here if you want to check it out. We'll see if it's good. Write it open. Yeah, it's right at the opening bell. Yeah, but we're not talking about day trading. We're talking about the biggest, most profound edge in the market is on the upside, long term, which is kind of how the market goes. Again, if you want to vote whether Powell's going to be hawkish or dovish, here is the link. Check it out. Again, do me a favor, hit the subscribe button. Today we will hit 110,000 subs. We only need about 100 subs left. So 110K subs today. We see when the ECB event actually starts. No, but yeah, Powell speaks today. Powell also speaks tomorrow morning, but tomorrow we got a lot of big stuff coming out. So Nvidia actually did pop back up. What's everybody's thoughts on Nvidia? Well, Nvidia is an interesting look today. Nvidia pulled back heavily in pre-market. And again, my bias was on the upside, and maybe I'm just getting scared out of this one. But that's where my bias mostly was today, was on the upside. So we got this. All right, guys. So again, Nvidia at 404s again. We're going to see what actually holds. Looking at our poll numbers here. 71% of people think we're going to be hawkish. 29% of people think we're going to be dovish. I don't know. I hope it's dovish, but you never know. I thought you said Nvidia was overvalued. I mean, I don't know whether Nvidia is overvalued or not. What I said, and again, people always tend to kind of like cherry pick what I say to, you know, but what I said was that Nvidia's PE ratio is very high. It's pushed up a lot. A lot of people think it's extended, and the real test of this is going to be during the next earnings season. So next month in July and August, we're going to see the earnings come out for these stocks, and we're going to see whether these companies are really justified in being as high as they have been. You know, I'm not saying they're not. If Nvidia comes out with great earnings and just beats everything and has great guidance, then, you know, then it'll sustain maybe. If it doesn't, if it misses earnings and comes out low, then it's certainly possible we see some corrections heading into the next earnings report season. Again, that starts in July. We have Tesla in mid to late July. Spark it off earnings season. We've got Apple, Amazon, just a lot of big earnings reports coming out soon. And yeah, we're going to watch these and see what happens. Yeah, Bitcoin down at 30.2. So we got the SPY here. Nvidia trying. Tesla, we can put Tesla up. Tesla at 251. So Tesla's had a nice little run today in pre-market for sure. Nice little green day yesterday too. So Tesla's up. Hey, good luck, Young. What is the indication of your caption regarding General Mills? It's just the report. So earnings came out for GIS. They came in better than expected for EPS, worse than expected for revenue. They did raise their dividend to 9%. With that said, thanks for the reminder. So yeah, Powell speaks with the ECB panel to discuss the economy at 9:30 a.m. Eastern Standard Time. This event will be streamed live here. So we got that up. Powell speaks with an ECB panel today to discuss the economy at 9:30. It's going to be streamed right here live today as well. So we will be streaming this thing live right here. We'll cover it all. Remind me to switch my headphones out prior to it, though. But we should be good here. They're trading for the first 15 minutes. Well, yeah, Powell's speaking as well. So, you know. So is it possible bearish for the US dollar? I'm not sure. It depends on what Powell says. For the experienced traders, is the stock market always this slow in June? Always is never true. It's never always. Typically, the slowest months of the market are the summer months, and they heat back up during the fall months. So typically, the market is slower in you know, April, May, June, July, August, September. And then volatility starts to come back a little bit more October. The most volatile months of the market are October, November, December, and January. The spring months are a little bit mixed. Like they can be volatile, they can be slow. Summer months are the slowest, and with slowest month being August or September. I can't remember which one. Which one is it? Which is the slowest month? It's either August or September. And then that volatility starts to heat back up in the fall months of like October, November, December, January. So that is the natural state of the market, but it's never always. It's always, it does vary depending on what's going on economically. Yeah, MU earnings today. So again, MU earnings today. Yeah, what's the slowest month in your opinion? It's a good question. We'll ask people. What's the slowest month for the market? Curious. Good question. What's the slowest month for the market in your experience, guys? Let me know. Got to be August. Yeah, I would say it's August. August or September. Go away, May. Yeah, I know there's certain months where the market historically just does not look good. Tesla pulling back a little bit, but Tesla's had a really strong day too. It was red, and then it ended up ripping all the way back over 250. It got up to 250 20s, and now it's at 251 25s. Nvidia at 405s. Pretty cold in December and January for fall. Yeah, I mean, I don't mean fall. I mean winter. Fall and winter months are the busiest, right? So October, November, and then winter months of December, January, whatever winter months start. But the point is, fall and winter months are the most volatile mostly because, like, to think about it from a company perspective, right? Companies typically do holiday seasonal sales, right? And that influences their bottom line, and that makes markets more volatile because of more announcements, more sales, more economy, activity during the fall and winter months. And in summer, it's the same thing, just reverse. The reason the summer markets are slow is because big traders, hedge funds, a lot of them are on vacation right now. So a lot of them are traveling and on vacation, kind of like I am. Hey, Sassy, come here, baby. Come here. What's wrong? And yeah, Nvidia back over 404s. We'll see if it actually holds. Yeah, a lot of people are on vacation in those months. All right, so Nvidia is popping back up. Look at Nvidia rise here. It looks good. All right, guys, we still got 43 minutes before Big Papa Jerome Powell speaks today. I don't know. Poll, we got about 67% are hawkish, 33% are dovish. Let's look at our poll on here now. What are people saying on YouTube? Let's see. So our poll, 41% think a bull reaction, 34% think a bear reaction, 14% think neutral, and 11% of honest folks say, I don't know. And again, we'll see what happens here, team. Nvidia still popping up at 405. All right, Tesla pulled it back to that nice little bounce level right at 251. Yeah, Powell speaking today. Again, right at 9:30 at the opening bell, Powell speaking. Dollar spiking. All right, we're going to get in some trades maybe too. Again, we're nicely green on Disney. The market looks weak right here, though. See if the NASDAQ keeps breaking down. Taking a few trades. I might buy Tesla on this pullback too. It's got to be a small trade. Like, all right, we're in 25 shares of Tesla. Looking to see if we catch it on the bounce. I like this little dip. We're right at the previous low level here, so that looks good. So when we bought Tesla on the dip, the market actually looks weak, and so we're actually shorting the NASDAQ right now. but we're going long on Tesla here. So you can see we're short, very small position here on the NASDAQ, the mini NASDAQ here, up about $4. I want to give it time to break down, and I like Tesla for potential bounce, but it's kind of like a hedged trade where we're doing a little bit of both. Again, we're green on the NASDAQ. We're pretty much flat on Tesla here, so we'll give it time. I'm an optimist. Powell speaks at 9:30. And again, we'll stream the whole thing. I'm telling you though, dude, Chart Prime is genuinely impressive, bro. I'm not even trying to plug them as a sponsor, but like they are genuinely impressive, dude. All right, so we got a nice little breakdown here. We're gonna go and take half off there, lock that in. The NASDAQ, we'll go ahead and cut the rest, just keep a little scalp. I'm green on the day now, so that's nice. So we are now green on the day. Still red in Tesla. Red trading stocks though. Powell speaks at 9:30 in about 40 minutes. Well, it's an ECB Forum discussion. And so we're still in Tesla here. We got out of green on our NASDAQ trade. We'll see if Tesla can bounce up. I like the level on Tesla. I think this looks like a really nice little bounce spot. So like, you can kind of see that level here. I want to set up on MooMoo, my bank stuff, my account. I guess I'll have to do it on the app, right? All right, so we're now green on Tesla here. So Tesla now green too. I will take that. Let's get this straight. All right, so again, Tesla is bouncing up a little bit. So we'll see if we can stay green in all this. So we're green on Tesla. Again, I want to give it time to bounce. I like the bounce level. I think, you know, it had some strong price action and then it pulled back a little bit. So I think we can, if we can like get up here and then take some profit, that's the goal. Morning. All right, so we're green here.
Now. Come on.
All right, so we're now green.
Out. Yep. Out. Jesse.
Let's see if it holds. It's at 251.40s right now. 251.40s. All right, so nice little surge up here. Nice. And let me go ahead and take 10 shares off, just kind of lock in some gains on that. So just took 10 shares off. I could probably maybe take another 5 shares off too. And so we just locked in a little bit more. We got 10 shares left. It's a nice little gain here on Tesla here. So not bad. We shorted the Nasdaq, made money. We rode Tesla, made money here too. I'll let it keep riding. And so it's testing this top level again. That'll help us a little bit on the day here. Again, we lost some money this morning. Netflix will pump north of 433 and dump. Yeah, Netflix has just been up a lot the last couple of days. Any thoughts on MU earnings? Yeah, I think MU is interesting. The only thing I don't understand about MU is how ingrained in AI is MU, is my question. So, like, how big is AI regarding MU, I guess, is the question. All right, guys. So Tesla pulled it back pretty heavily. I could add to Tesla, or I could just sit. I think I'm just going to sit. I've already made money, took profit, green on the remaining. I think I'm just going to let it ride a little bit more. Now, we do have Jerome speaking in 30 minutes or so. That might influence everything, but I think I'm just going to let it ride a little bit. Oh, wait, this is the Mortal Kombat song. We got to switch this. This is too much. It's too much Mortal Kombat for me, I think. All right, Tesla's still dipping down some, too. Holding Apple IRQ. Yeah, for sure. That's what like how big in AI is MU is the question, because like MU was one of the quieter AI stocks that we don't really cover here a ton. You know, the question is how ingrained in that is MU, and I don't know. I bounced it a little bit, but I don't know if I trust it enough. All right, so all right, guys. Jerome Powell speaks in 30 seconds or 30 minutes, not 30 seconds. Sorry, 30 minutes. All right, guys. We're just sitting patiently here waiting. It's a hot sector right now. Travel. Yeah, again, I think MU is going to be the big ones because I don't know how big MU is going to be. MU is like one of the more quiet microchip stocks. And And so the chip stocks, like MU is one of the quieter ones, right? So I don't typically stream MU earnings, and I'm not going to be able to today because I'm on vacation right now. And so in MU, it's just hit or miss. And so, I'm going to kind of hang out with the fam today. But yeah, MU, the interesting take on MU is will it be influenced by AI? It's one of the earlier stocks this year during their earnings season. Will it influence AI heavily? I'm not sure. What's your take on JP speaking bullish or bearish? I don't know. I really don't know. I think there's a chance that both happen. And so I think there's a chance both happen, and I'm not sure. All right, guys. Let's see. Recipients. Let's see. And yeah, look at Nvidia pop. Tesla back up to basically where we were before. All right, guys. So they get Tesla at 251.75s here, 251.75s. Tesla popping back up still. Looks good. Again, I'm going to let this ride a little bit. Nvidia at the 404. We're looking at some news that recently came out. Volvo joins Tesla's charging network in a new deal, according to the Wall Street Journal. ChargePoint, Tesla stock get a lift. EV maker inks another charging win. It's Elon Musk's birthday today. If you invested $1,000 in Tesla's IPO 13 years ago, it would now be worth approximately $157,000 today. So $1,000 13 years ago would be worth about $160,000 today if you invested it in Tesla. IPO 13 years ago. Yeah, but if I had a time machine, I'd go back and buy Amazon in the 90s. That's the real buy. Like 2001, maybe. I can't remember when they IPO'd, but that's the real. If I was, everybody wants to be Michael J. Fox. Everybody wants to be Marty from Back to the Future nowadays. They're all wearing Jordan 1s. But yeah. Let's see what happens. Still looking at news. Let's see what we find. Okay. All right, guys. So Tesla is up there. Looking at our poll on, we do have a Twitter poll going on right now. We got about 20 votes. 42% think dovish, 58% say bullish. And again, vote on this poll. We appreciate it if you do. Again, we still got 25 minutes before Jerome Powell biffed it at first. I'd go back and buy Nvidia a couple weeks back. Yeah. While not directly focused on AI, Micron's tech is ingrained in supporting its infrastructure. What's up, Shepard? What broker do you recommend, and do you recommend for a beginner to try go from crypto to stocks? Well, they're different. So like crypto has much less red tape than stocks. Like you're going to be much more restrictive trading stocks, but you're going to have easier returns. Like again, the biggest long-term edge of any market is long-term. The S&P 500 is going to give you about 6 to 12% average per year. That's the biggest statistical edge the market will ever give you. And so while there's more red tape in stocks, that edge is profound. Now, there's other ways to get around the red tape. You could day trade futures, you could trade futures, you could invest in futures contracts, like do whatever you want to do on a shorter term basis. But you know, there's pros and cons to each, basically. Like crypto, less red tape, more risk. Stocks, less risk, more red tape. The answer too long to post, but I asked ChatGPT how ingrained in AI is Micron. Yeah, I mean they're going to benefit from AI, of course. Yeah, the guy at the blackjack table yesterday said AEL, I think is what he said. American, what is this? Invest life holding. I don't know what it meant. I think it was AEL or maybe it was AEP. Okay, it was American Electric Power is what he was saying. It was AEP. So he was talking about this stock. The other guy said he invested in AI with Nvidia. AEP's down over the last year. Zoom out. I mean, it's got a long-term upward trend. Kind of following the rest of the market, I think. So we're still in Tesla here. Tesla's still trying. It's still green on the day. We're just sitting in it tight. Yeah, Ride bounced yesterday at the lows. Is it Ride going bankrupt? Was it Chapter 11 or Chapter 7? Chat. Was Ride Chapter 11 or Chapter 7? Chapter 11, I believe, is reorganizational bankruptcy. Chapter 7 is going out of business bankruptcy. So I'm not sure which one Ride did. I'll have to look. If it's Chapter 11, it's just reorganizational. If it's 7, it's not good at all. They are... See if we can figure out. I'm sure chat's going to help me. Chat, Chapter 11 or 7. Does anybody know? Lord, it was Chapter 11. Okay, so it's reorganizational bankruptcy. That's better, but it's not good still, of course. Bankruptcy is never good. But Chapter 7 is bad. Right? Maybe I'm wrong here. I've never filed for bankruptcy, luckily, so I don't really know. Chapter 13. Chapter 7. Yeah, so Chapter 7 does not involve the filing of a plan of repayment. Chapter 11 is reorganizational. So Ride is a reorganizational bankruptcy. I'm pretty sure so. Which means that, like, it's the same thing Hertz did a couple years ago. But yeah, here's the SPY. Here's Tesla. We're still in Tesla small. Tesla pulling back. Luckily, we took some profit there. I think we'll just let the rest ride. Pun intended. Again, Powell speaking again today with the ECB. Hey, baby. Good morning.
How you doing?
I'm doing good. Just kind of waiting. Jerome Powell's going to speak today. So yeah, Powell is in Portugal right now. He's going to be speaking in Portugal. Again, it's his third time speaking in a week, so it's kind of big. It's not small. Again, 20 minutes, guys. 20 minutes before Big Papa Powell speaks. I'm in Argentina, and I don't understand your stream, but I'm still here trying to decipher everything you say and so on. But I have a question. Don't you think it's strange that the market falls so much before Powell speaks? Well, yeah, there's definitely institutions, Jeremiah, that know more than we do. The banks are specifically who it is. Like the banks are going to have a much better idea of like what's going on. They're going to have inside information, and the SEC is much less strict on banks regarding insider information. So you better believe banks take insider trades, politicians take insider trades, but the SEC is just not strict on them, mostly because everybody profits from it. Now, retail try to do the same thing. You're going to be in tons of trouble if they catch you and all this stuff. But like, again, they kind of turn a blind eye to the banks for a few different reasons. But yeah, that's kind of what goes down. Okay, so there's my alarm. I'm going to switch my headphones out. Since I've so you guys can hear the new music. So again, Powell speaks soon, guys. Powell speaks soon. All right, we got Big Papa Powell. We are waiting here for Powell to speak. We're going to put this up. There we go. Still waiting here. Again, you can kind of see. Here is the link here. We are sitting by waiting. Sitting by waiting. Tesla is pulling back a little bit here now. So Tesla dipping down, and we're at 251.20s here, 251.20s. Yeah, there's definitely some algorithms taking trades based off of what he says too. A lot of them are going to interpret the words like inflation is elevated as a buzzword. Raise rates is a buzzword. Recession is a buzzword, of course. So there's just a lot of there's a lot of potential here. What do you think is more likely, a pullback and another bull push since Powell's speaking, or do you think the bears come out and we retest yesterday's low support? I don't know. I think that type of reaction is very difficult to predict which way we're going to head in that regard. I'm not sure. There's a lot of ways we could head here. We could go up, we could go down, we could go sideways. All I do know is that Powell is speaking today. It's a big day for market activity. And, tomorrow we have GDP data, unemployment. So tomorrow we have GDP data, which is very relevant for recession fears, inflation, and all that stuff. So it's kind of a big day in that regard for a lot of this stuff. All we can really do is just wait and watch and react. So we just got to be patient here and just sit and wait for Powell to come out, see what he says. Again, I'm going to probably be pretty flat in terms of my short-term trades. All right, guys. Powell coming out. We got 15 minutes here, guys. 15 minutes. Bullish or bearish reaction here, guys. Bullish or bearish reaction. Let me know what you guys think. Bullish or bear reaction here. I don't know how long he's going to speak for, but we're going to stream the whole thing live, so you'll be able to watch all of it. We are also going to throw this thing in sub-only mode here, team. So if you have not already, hit the subscribe button, hit the notification bell. We appreciate the love and support. We are now in sub-only mode, I believe. So all the subs, announce yourself, show us that you're subscribed. Again, today we will break 110,000 subscribers. So again, if you haven't already, hit the sub button, hit the notification bell. I appreciate it. Help support this channel. Yeah, Powell speaking. I mean, I personally love Powell, and the reason I like Powell is because Powell streams are good for my channel, dude. You know, you look at my content over the last week, you know, my channel over the last week, just to put it into perspective, since Powell has been speaking, has 30, 40. My channel has about 50,000 views over the last couple days. If you include today's stream, we're going to have, you know, 60, 70K views over the last week. And it's mostly from Powell. All right, so my Tesla trade's dipping down. We're still slightly break even. I'm going to let this just ride and work. We got a decent pullback here. We got about 600 people. Again, everybody hit the sub button, hit the notification bell. I appreciate the love and support. We got Big Papa Powell speaking in about 15 minutes. Guys, 15 minutes. So sit tight, guys. We are waiting. Yesterday was a surprise. Well, yeah, no one streams this kind of content. Well, they do, but we're the most reliable. We're the big. Where most people come. They know I'm going to cover this, and so the reason we get thousands of people tuning in for these streams is because they know we're covering it. You know, no better stream. My guy Justin, thank you, bro. Again, hit the sub button. Looking at our Twitter here, about 43% think he's going to come out dovish. 57% think he's going to come out hawkish. On YouTube, we got about 900 votes. 39% think we're going to get a bullish reaction. 34% think we're going to get a bearish reaction. 15% think we're going to come in neutral for reaction. And 12% are honest folks who say they don't know. And I appreciate the I don't knows here. Hey, what's up, Hammond? Hey, go. How about those Tigers, Hammond? I see your name. You got a Florida Lee. As a fellow Louisianian, go Tigers, bro. Skeens. Dylan Cruz. We got Tommy Tanks. Go Tigers. GOAT baseball team of all time. Greatest college baseball team of all time right there. If you want the link for Chart Prime, check out the description, bro. Link is in the description, dude. Check it out. We got 13 minutes. 13 minutes. Yeah, I mean, my big thing here, guys, is I don't sell a course. I don't sell a service myself. I don't claim to be an expert. I don't act like a guru. I constantly tell people I don't know. I tell people that I don't guarantee that I'm an expert. I tell people not to copy me. We're just a resource and community. Really, we're an economic channel. We cover economic data and big market movement and market news. So we're a stock market and trading news and economic channel. So we cover Powell, you know, GDP, unemployment numbers, like all that stuff here. We cover it very consistently. We cover all the big earnings reports. We tell people what's going on in the market, and people do tune into the stream. The reason we get thousands here is because they know we're reliable enough. They know if something big is happening, we're streaming. And so if you appreciate that, and you appreciate a place where we're not selling you a course, we're not acting like experts and fudging our numbers to try to slang courses at you. We are just giving away free content here. It's all free. There's no paywalls behind anything. Yes, we have commercials. Yes, we plug sponsors. But, you know, we make maybe, one plug an hour here, which is very reasonable. The radio gives you a commercial, every 20 minutes? We do about one plug an hour. And with that said, if you haven't already checked out TopStep is one of the ways you can day trade with a low barrier of entry. Again, a lot of people are going to lose funded account programs, but that's the point, is because there's no PDT in futures. And if you try to put the money up yourself in day trade futures, you can lose thousands and thousands of dollars. If you try to do it in stocks, you're going to need at least 25K to day trade. And in the futures market, you can day trade. You can day trade the S&P 500. You can day trade the NASDAQ. You can day trade currencies. You can day trade gold and silver. The patterns are very similar to stocks. You can day trade essentially the SPY, and there's no PDT rule. But again, if you want to put the money up yourself, you're going to lose thousands of dollars most likely. And these funded account programs, what they do is they give you a demo and they test your skill. And if you can hit the target on the demo while following their rules, TopStep is the most legitimate futures funding program in the world. If you can pass their testing, they give you anywhere between 50K up to over 100K in funding with a 90% split. You get to keep your first 10K in profit as well. And again, most people are going to lose, but that's kind of the point. It's the best of both worlds. If you lose, the base package is 130 something. You can reset it for 100, very low loss amount. If you pass it, you still keep 90% of your profit. You get to keep your first 10K. And so it's the best of both worlds, limited risk, but you get a lot of the rewards if you're good enough. If you want to check it out, great way to help support the channel. They are a sponsor of mine. I am certainly biased in their favor because they pay me money, but I think it's good for traders. If you want to check it out, here is the link. Get ready for Big Papa Powell, guys. 10 minutes here, team. Yeah, so you can check out Top Step in the chat. John, what is the discount code? BTRADE. But you'll see it at checkout. So you'll be able to see it at checkout. So if you want my discount code, you're not going to see it when you first put it up. It's at checkout. It'll give you the discount at checkout. It'll be 40% off. You'll get it for like 34 bucks, I think. Option flow for today should keep the market bullish, but Powell can rain. Yeah, for sure. Pro, so number one, it's just a challenge, man. Most people are going to fail these challenges because it's difficult to succeed. And I mean, that's the point. It's not a surprise that most people fail because most day traders lose. 95% of day traders lose money. And so when you're first getting started, you can either put the money up yourself and lose thousands of dollars, or you could try a funded account program. If you lose, it's much less, to be honest. But if you're good enough to pass it, then you get a lot of the same rewards. You get 10K of your first withdrawal. You get to keep 90% of your profits afterwards. And it's the best of both worlds, you know. But again, don't get it twisted. Most people will lose these because most day traders lose money. But again, if you think about it, it's 130 something a month. DOS paper trading costs what, 130, 120 bucks just for their market data and paper trading platform. This is similar in price, but there's a lot more benefits of it. It teaches you how to trade. They have free funding coaches. There's a lot of reasons to do it, but you got to have reasonable expectations for it. Anyways, Nvidia trying to bounce at 404. SPY sideways here. The link for Powell is right here, taking profit. So we're going to be streaming Powell's speech right here, live. We got it ready right here. Yeah, I'll put it up right here. I'll put the link up in the description too, but we're going to stream it here and you'll be able to watch the stock. Sideways day. I don't know. Depends on if Powell breaks us out of this. Yeah. Again, subscribe, guys. Help me hit 110K subs. I'm ready for it. Help me hit 110K. We should hit it today. Yeah, we need 75 subs. Or no, we need 85 subs left, and we will hit that today for sure. Subscribe, guys, if you haven't already. You know you want to. Just try one time. I feel good. Do it now. Everybody's doing it. Peer pressure. Subscribe. Busy week. So we got Powell today. We got tomorrow. We got jobless claims. We've got tomorrow. We got jobless claims and unemployment. No. Tomorrow we have GDP data and jobless claims. So big day tomorrow. Very big day. GDP, jobless claims tomorrow. Friday, we have the personal consumption expenditure index, core PCE is what it is. And it's what Powell likes to use for his inflationary metric. It's the Fed and Powell's preferred inflationary metric, just to show you how relevant to the economy Friday is. Friday is what's called the personal consumption expenditure. Again, it's Powell's preferred inflationary metric. It measures how much prices are changing for consumables. And it's just a really relevant metric that a lot of the market pays attention to. That's Friday. Tomorrow we got GDP. Today we got Powell. Just a lot of stuff going on. Again, we are sitting here live waiting for this to start. Nothing out yet. They are not live yet. We are just kind of sitting tight waiting. I'm going to make sure we get this live too. Make sure we are live here now. Yeah, so I got both of them live. I'm going to see which one starts first, and we will give you guys that one. But yeah, we are ready here. Tesla, we're still in Tesla here. I guess I'll let Tesla ride. We're still kind of green on it, but. All right, guys, we got a little bit over 5 minutes. What is Powell's motivation? What will he want to do with the market with his words? Because, I mean, he's speaking with the European Central Bank, the ECB is the abbreviation for it. So he's speaking with the ECB today. It's a panel with the ECB, the European Central Bank. That's what's going on today. So he'll almost certainly talk about the economy in one way or another. What he's going to say is more arguable and less known. And so again, 6 minutes here, guys. 6 minutes. That's also the opening bell. So you'll probably see me day trade, pretty actively too, while he's going through all this stuff. And so, yeah, you're probably going to see me day trade pretty actively too. And again, I'm going to be day trading on Top Step funded account program for futures. Great way to get started. Great way to learn. Teach you how to trade. So we're going to put this up on the bottom here, probably like this actually. See how this looks. All right, so let's prepare. So that looks good. Might not be able to see that super well here. So we'll get this up, and I'll also. All right, there is, what is that? So we got the SPY, Tesla, Nvidia up right here. I'm going to put, instead of Nvidia, I'm going to put the dollar index up on the left right here. So there's the dollar index. Tesla, the SPY, and then we are going to put the S&P in the middle right here. So we are going to put the S&P up right here. All right, guys, you can see the timer. And then we're going to put this thing up as well. There we go. All right, so I think this is pretty good. Let me move this up a little bit more. What do you guys think about that? That's good. Y'all can hear the music too, right? All right. When Powell says there's a path for no recession, means there's zero chance of a recession, FYI. I mean, not really. If he says there's a path for no recession, that means that there's chances that we don't hit a recession. I mean, it's probably still, I mean, I don't know, man. Again, too many people are biased to really say, again, I'll say this once, I'll say it again. Anybody that says that one outcome is 100% going to happen, I usually lose credibility in whoever says that, because anybody that has any real market experience like that is going to understand that it's all based on probabilities. Nobody knows for sure, and anything could happen. And so there's certainly a chance that we don't hit a recession. There's certainly a chance that we do. But anybody that says in full, like, definite outcome, usually I think has less market experience. But again, make sure y'all hit the live button next to the play button to make sure you're caught fully up on the stream. Also, guys, we are very close to hitting 110K subs. And again, we will hit this today for sure. We need less than 70 subs now. So yeah, we're getting there. We're going to hit it today for sure. So again, subscribe if you haven't yet. Hit the notification bell. Let's keep the growth up. We still got about a minute and a half left. We're waiting for the ECB to start. Their forum is today. I have market experience. Well, if you have market experience, then you understand that no outcome is 100% certain. Yeah, no. All right, guys. Powell should be starting in less than a minute here. I got two different options up, though. And so we do have two different options. So I will put up whichever one updates the fastest here. We got both options. If the other one comes up faster, then we'll put this one up on the screen, and I'll even prepare it for that right now. But I think this one that we got up is going to be pretty solid. but just in case, we will prep for both of them here. And yeah, we are ready. All right, guys. I'm going to go ahead and turn this this timer off just so it doesn't interrupt us. And again, you should be able to hear the music, right? Sound check, 1 2 1 2. Y'all can hear the music, right? We're going to turn this up all the way. I'm going to go ahead and mute this, mute the music, and turn the sound on just so I can hear it. So we know exactly when this thing starts. Yeah, nothing's certain, 100%. When you trade the market long enough, you start to really learn that nothing is a for sure in the market. Nothing is absolute. Anything could ultimately happen. All right, so there is the opening bell here, guys. So we do have the opening bell, waiting for the ECB to start, and we will be day trading if we can today at the opening bell. But there's the opening bell, still waiting for the stream to start. It hasn't started yet. A lot of people are still waiting for it. It's been paused. The market's pushing up a little bit ahead of this here. Tesla is rising at the open, and that's nice because we are in Tesla here. We're slightly red on it now, though we were green, but again, got a little bit stubborn with it. But we're green on the trade now, but very small. We'll see if it rises back up. Again, still nothing started yet. Tesla did pop up a little bit. Well, even that's not certain random. It's just highly, highly, highly probable, you know. But I think looking at the, I think arguing whether we're going to hit a recession or not is certainly not 100% either way, you know. And I think that's a very self-evident thing, is that it's just not 100% either way. I don't think we can call it 100% because I don't think that's fair. And I think you got to give people at home reasonable expectations for it, which is that we really don't know or not. The Fed, I will say, has become increasingly more optimistic that we are not going to hit a recession this year. But of course, nothing is 100%. I hope they're telling the truth, but like in that regard, again, we really don't know. And we just kind of got to sit here and wait. Now, I think there's a chance we do it. I'm going to cut Tesla here. We're losing here, so I'm just going to cut it. Hey, we're only down $14 today, so this could be worse on Tesla. But yeah, my point is that nothing's 100%. Even long-term bull action on the SPY or the S&P is not 100%. It's just much more probable than any reaction from the Fed in terms of, or any prediction from the Fed in terms of recessions. Yeah, but I mean, people have been saying the same thing for the last year, and the market's mostly flown up over the last year. So, you know, the constant state of the market, guys, is that you universally throughout any market phase or cycle, you always got people telling us the market's going to crash. And again, one of the things that is, you know, generally true is that nobody actually knows what we're going to do. We certainly don't have to go into a recession. We certainly don't have to crash. And again, nothing is certain. And I think it's important to look at the market in that regard. And I think that's what experience will show anybody, is that nothing is certain. All right, guys, sitting back, waiting here, waiting for it to start. Nothing started yet for either one of these. Yeah, I mean, financial, I'm not going to argue, brother. It's all good here. We can disagree. What you said was that, what you said is that there is no chance that we don't go into a recession. And again, maybe we do hit a recession, but I don't think anything is 0%. Nothing's 100%. Nothing's 0%. I think it's always typically somewhere in the middle. And I think experience, you know, shows people that over time. Anyways, market's starting to flush out here. We will start shorting if we can get into some good little day trades here. Patience is the name of the game today, though, especially with Powell speaking at the opening bell. You got to be a little bit careful. Again, we will day trade some markets. Hey, thank you, CJ. I appreciate you, brother. Thank you, man. Yeah, but for a recession, what the market what will cause a panic is not what the Fed says. It's more so what the market does, and the market's not doing it yet. And maybe it does do it, but for now, we're just kind of sitting here waiting. Yeah, I don't know why they're late. They're usually pretty on time, but it's just whatever for whatever reason they're late. I'm on multiple different things today, and it's just they're just not on yet. We're just kind of waiting. You really are a great teacher. No trading for me, just watching daily learning. We'll trade one day. Hey, thank you, Alexis. I appreciate it. Bro, you still here doing it? You're the best. Live news feed. Don't stop doing these. Hey, thank you, man. I appreciate it. Yeah, Powell speaking with the ECB European, the European Central Bank Forum today. It's a speech. You can see we're live, like we're waiting here. You can also see we got another option up here, and we are completely live on this one as well. And nothing's up yet, so they're still waiting. It says the session will resume shortly, so we're just kind of chilling here, waiting. You watch a speech right here. We're going to cover the speech right here. Yeah, I don't know where Powell is. We're just kind of sitting back waiting here. Market's kind of flat ahead of this too. SPY is up a little bit at the over the last couple of minutes, but down overall since the opening bell. The dollar index is mostly sideways over the last like hour. Tesla's sideways since the open too. Is there a time zone difference where Powell is? No, but you can even see it here. It just switched. It said the session will resume shortly. Prior to this, it actually gave the time. But yeah, we're just kind of sitting back waiting here, guys. So we just got to wait for Powell. It'll start when it starts, you know. One thing about the Fed, unless it's the FOMC meeting or stuff like that, you know, sometimes they're late. No, the FOMC meetings are pretty on. They're pretty. FOMC meetings are usually pretty. They're usually pretty. They're pretty on time. So here we go. Something just changed here. So here we go. Should be starting anytime now. Okay, so this one is faster. So the one I'm on now currently is much faster than the YouTube stream. So that's good. Remember, sub to chat, guys. We should. Here we go. Sound check. Sound check. Should be able to hear it. Sound check 1 2 1 2.
Even the Bank of Japan is considering unraveling its decades-long ultra-loose monetary policy. The question now is how long will policies have to stay in restrictive territory to bring inflation back to institutions' 2% goals? And is it possible to do so without creating a recession? Ladies and gentlemen, the members of our next panel will bear a great deal of responsibility for bringing inflation back down to 2, and not only that, but keeping it there. Sarah Eisen, the closing bell anchor at CNBC, will be moderating this session. Sarah, over to you.
Thank you so much, Claire. And let me just say, as a business and financial journalist who started out in foreign exchange, this is pretty much as good as it gets. So thank you for having me talking to the big four today. And what I love, I'm excited for this conversation because it's always fun when everybody's in different places and going at different speeds and maybe disagreeing if you dare to do so today. So thank you all. President Lagarde, I'll start with you as the host of this meeting. On The View from Europe, I'm curious where all of you are in terms of this policy path We've certainly seen a fight against inflation. You've been very clear that there's more work to do. How much more?
Thank you so much, Sarah. It's very nice having you in this closing moment. And I'll take this opportunity to thank all the contributors, those who have prepared papers, those who have worked with the presenters, and all the panel members. It's been really, really a rich conference, and I want to thank you. So, as far as the European Central Bank is concerned and the Eurosystem at large, we have covered a lot of ground. We have increased our interest rates by no less than 400 basis points in very short order, less than a year, and we still have ground to cover. And I think that, as I said earlier on, we are data dependent. We will decide on a meeting-by-meeting basis, but we know that we have ground to cover. And if our baseline stands, then we also know that we will very likely hike again in July.
What about September?
That I will not tell you, and for a very simple reason that I just mentioned, we are data dependent. We'll decide meeting by meeting, and we'll tell you. For the September meeting, we will have received a lot more data, information, survey results, and it's going to be another projection meeting prepared by the staff of the ECB. So we will have a lot in our hands to make our decision then.
Governor Bailey, you surprised the market recently, raising interest rates by 50. You did a double. Why did you feel the need to do that?
Well, it really picks up on the theme that Christine has just developed. First of all, I mean, the UK economy has turned out to be much more resilient, and that's a good thing. I mean, there's many good aspects to that, but what goes with that resilience is signs of a very tight labour market, which is showing through in pay awards, but also showing through. I mean, we've got an unemployment rate of 3.8%, which is historically right at the low end. So that resilience is coming through that way. But when we looked at again, to Christine's point, when we looked at the data, because we too are being driven by evidence at the moment, the cumulative data, both particularly on the labour market and on the inflation release we had, which to us showed clear signs of persistence, caused us to conclude that we had to make really quite a strong move at that point. It was justified. My own view on that was, if we were really of the view that we were going to do 25, and then we were really sort of baked in for another 25 based on the evidence we'd seen, it was better to do the 50. And then we will, as Christine said, we will be evidence driven. So we will wait for the next set of evidence for our next meeting, which, to Christine's point again, will also be one where we will have a full forecast.
Have you received a lot of flack for the move?
Well, I think at the moment, I can understand why there are critics of us and central banks. We have a job to do. I'm very clear that our job, all of us are very clear, I think our job is to return inflation to target, and we will do what is necessary. I understand the concerns that go with that, but I'm afraid I always have to say that it is a worse outcome if we don't get inflation back to target.
Something I know you've all been saying. Chair Powell, you've said it many times, and yet you paused, but you're not calling it a pause, and you're not calling it a skip. So what are we calling it?
Well, first of all, Sarah, thank you, and Christine, thanks for hosting us here in Sintra. So what we're calling it is maintaining the level of the federal funds rate at its current level for this meeting. Thank you. And we did that. If you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago, and we think so. We've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long. We started at negative real interest rates, and we've now moved up to where we actually are in restrictive territory, but we haven't been there very long. So we believe there's more restriction coming, and what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created, there's strong wage gains, and that's driving spending, driving real incomes and driving spending, which is driving more demand and continuing to drive labor market. So the labor market is really pulling the economy. And my colleagues and I, as you will know, wrote down in our SEP 2 more additional rate hikes. The median was quite a strong majority, actually wanted 2 or more. rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So I don't get why you didn't raise rates at the last meeting, especially I think it was a surprise that it was a unanimous decision to hold rates steady when you said a majority think that they still need to go farther on raising rates.
It's really just as you get closer and closer to the goal. What we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming from these, through the pipeline from rate hikes that we only made now, in many cases, 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike.
We've not decided that. So the only thing we decided was not to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way. It may not work out that way, but I wouldn't take, moving at consecutive meetings off the table at all.
I'm trying. Governor Ueda, first of all, it's great to talk to you. We haven't heard much from you outside of your policy meetings in Japan. I think the world wants to know why you're the global outlier here. You have decided to maintain your easier monetary policy in the face of rising inflation. Why?
So a simple answer would be, although the headline rate of inflation is above 3%, which is well above the 2% inflation target, we think underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
Even though we've seen measures, including core, right, higher than the 2%
the usual
level.
Core is also above 2%. But let's say, let's look at the rate of increase in wages, which is an important determinant of underlying inflation. It has risen, but is now running at around 2%. Now, if you want a 2% inflation rate, wage inflation that's consistent with that would be slightly or well above 2% if you assume productivity growth rate is positive. So there's still some distance to go, we think.
And as a result of your policy being different than all these policies of your colleagues, the yen has gotten very weak and continues to weaken by the minute. Is it too weak?
Well, the yen is being influenced by many factors other than our monetary policy, including the policies of these 3 banks. So we'll see. We monitor the situation very carefully.
Monitoring the situation?
Yes.
For intervention purposes?
No, it's the jurisdiction of the Ministry of Finance. Decisions on intervention.
President Lagarde, how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation for you to feel comfortable taking a pause or potentially going the other way.
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered, inflation was, I think the highest reading we had was 10.3. We are now at 6.1 headline. Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy and that is visible for people, for the consumers of Europe, but we're also looking at underlying inflation. And on that front, we are not seeing enough tangible evidence of the fact that underlying inflation, particularly the domestic prices, are stabilizing and moving down. So we're looking at as many measurements as we can because we want to be in sufficiently restrictive territory for long enough so that we are confident that we reach our 2% medium-term target.
Why is it so sticky? Governor Bailey. And why is your inflation rate higher than that of Europe's?
Well, let me distinguish headline and core for a moment. So with headline inflation, I do expect it to come down markedly this year, as we've been expecting for some time. And a lot of that is to do with the fact that the unwind of energy measures in the UK is on a sort of somewhat longer track, so that we will see some quite sort of discrete sort of jumps down in headline inflation in the UK throughout the rest of this year. And indeed, actually, you know, energy prices are now somewhat weaker anyway than we thought they would be even quite recently. So it's core that's the issue, just as Christine has said. Core is much stickier. I think I come back to the labour market again. We have a very, very robust labour market and strong labour market in the UK. One of the striking things about the UK is that the size of the labour force is smaller than it was at the outbreak of COVID. So we have had a shrinkage of the labour force. We're seeing some reversal of that now, but we're still not back to where we were pre-COVID. So that is causing you know, the position in the labour market to be very tight. And I see this when I go around the country talking to firms, because I can, you know, what they say to me very frequently is that their plan is to retain labour as much as they can, even in the event of a downturn, because they've been concerned and it's been difficult to recruit labour. So that's certainly taking place. So I would say there's a backdrop of a very tight labour market going on.
Is it Brexit related also?
I don't think Brexit is a part of that labour market story. I think a lot more of it is actually to do with, frankly, you know, the response to COVID. I mean, we've seen people. UK is a little unusual in this respect. We saw people come out of the labour force during the COVID period. Other countries have tended to see that position reverse more quickly and more strongly than we've seen in the UK.
Governor Ueda, when it comes to the inflation path for you, I mean, I know you'd like to see it continue to rise from here, right? What would it take for you to really strongly consider abandoning the yield curve control and negative rates?
So we have a forecast or projection of inflation path that looks like it's going to go down for a while toward the end of this year on declines in import prices, and it's spill over to domestic prices. And from there on, we are forecasting some increase in the rate of inflation into 24. But we are less confident about the second part. If we become reasonably sure that the second part is going to happen, that could be a good reason for a policy change.
If you see a steady increase.
If we are reasonably sure that the second part of the forecast is going to.
But didn't you learn from these three that inflation turned out to be not transitory?
Excuse me?
I mean, wasn't one of the lessons from the last year that inflation wasn't transitory and that there are some elements in it was not?
Yeah.
That there are some elements of it that are sticking and proving difficult to fight.
Right. So the second part is the sticky part, but it's still, as I said, we think less than 2%. We hope to make sure that it's going to go up to 2%.
Chair Powell, we've seen some progress in the US. Certainly, if you look at the headline CPI from 9% down to 4%, I know you're focused on core, but what would make you feel better about it that you could remain on hold?
So the progress on headline inflation coming down is certainly welcome and ought to help keep inflation expectations anchored. But I think it actually helps to think about core inflation broken into three pieces. The first of which is goods inflation. And we've seen goods inflation coming down for 6 months now. And that's because supply chains are improving, the shortages are more or less gone, and also because consumption is moving back to services and away from goods. So that part of the story makes sense. Housing services is the next piece, and between that and goods, you have a little bit less than half of the total index. And you see now the new rents that are coming in are at lower increases or no increase, and so there's significant disinflation in the pipeline there, but it's going to take 12 months or 18 months to get there. The place where we haven't really seen much progress is in non-housing services, which is a little more than half of our core PCE inflation index, and that's hotel services, travel services, food service, financial services, healthcare, those things. It's a generally very labor intensive. Some of it's quite cyclically sensitive, but some of it's not. The point is, that's where we're not seeing a lot of progress yet, and the reason is that, or one explanation for it is that labor costs are really the biggest factor by far in most parts of that sector, and so what we need to see, we've seen a lot of signs of softening in the labor market, but it's just kind of beginning. We need to see a better alignment of supply and demand in the labor market, and see some more softening in labor market conditions, so that inflationary pressures in that sector can also begin to subside.
Are you surprised that hasn't happened yet after 500 basis points of tightening already in a little over a year?
Yes, I think widely it's been surprising that inflation has been this persistent, but I think the bottom line is that policy hasn't been restrictive enough for long enough to start to see those effects. And the service sector is not especially interest rate sensitive, by the way, as opposed to, for example, the goods sector. So we wouldn't expect it to be the first to be affected, but we would ultimately expect, as demand softens and as the labor market conditions go more into balance between supply and demand, we would expect to see inflationary pressures subside in that sector as well.
Do you guys coordinate? Do you talk amongst yourselves?
Yeah, of course we do.
I mean, do you call before policy meetings?
Can I
Yeah,
just,
please.
I just want to follow up on what Jay said, because I think he's completely right. And I think that this is what I call the catch-22 issue, where we have an expected catch down, where manufacturing eventually will align, or services will align on manufacturing. And that would be the logical consequence of the lag time that it takes for services to align with manufacturing, and to see prices go down in that sector. The catch up is that of labor, because it is, as Jay said, labor intensive. It's generally relatively low productivity and low skilled jobs in those sectors, and also those jobs that are going to seek the catching up with pre-COVID times. And how that catch down, catch up will be resolved is going to be critically important for where inflation is heading. Because if we see inflation going down in that service sector, and movement of wages while increasing at a moderate pace, then we would be in a relatively good place. But that is totally question mark for the moment.
Yeah, it sort of raises the question, Chair Powell, about whether we need to see a much higher unemployment rate in the US, and you're all dealing with a tight labor market, to finally really break inflation.
So, that the way we think about that is that there seems to be a path still for labor market conditions to soften and for demand and supply to get back into balance without the kind of large job losses that have happened in many prior cycles. And the reason for that is the level of job openings that still exist in the labor market. So it's still set 1.7 job openings for every person who counts as unemployed. That has been coming down. Actually, the number of job openings has come down now by almost 2 million. And what you're seeing is wage pressures are still high, but they're definitely coming down. You're seeing surveys of workers and businesses suggest that the labor market is not as tight as it was a year or two ago. So you're seeing a job creation is beginning to come down. There are a number of indicia that would suggest that we're getting the softening that we need. We're getting it slower than we'd expected, but nonetheless, it's happening. So it's still a possibility there. But it's so uncertain right now. And in my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible. And of course, many forecasters do predict that.
Is Europe in recession, President Lagarde? I mean, we've seen 2 negative quarters of GDP. I don't know how you define it. But
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant, to say the least. And the expectations for Q2, particularly in the industrial sector, if I look at PMI numbers, are not particularly are not giving us great hope that there will be a strong recovery. We see a second half of 23 up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
Do you agree with Chair Powell? Do you think you can get away with this tightening cycle without dragging Europe into recession?
Our baseline does not include a recession, but it's part of the risk out there.
Are you willing to tolerate a recession?
Well, the interesting thing for us is that if you go back to last November, when we did a forecast, we were predicting quite a long but quite shallow recession. And the economy, as I said earlier, has turned out to be much more resilient so far. Now, I think you can sort of point to a number of things that underlie that. One of the things I would point to is the fact that we've had a very sharp fall in energy prices in Europe. And that obviously has helped with the whole question of the terms of trade shock that we've been having. It's done quite a bit to reverse that terms of trade shock, and that feeds through into national income. So I'm not surprised that we've had this reversal in one sense. What was surprising, but actually very helpful, was that, of course, we did have this big fall in energy prices and a much better winter, frankly, than we thought we would have. So, yeah, we're going through this year now in a more resilient position than I expected. So we're not currently forecasting it, but obviously we have to watch it very carefully.
How's the Japanese economy faring? I mean, it's very exciting if you look at the Japanese stock market at a 30-decade high. What's happening fundamentally?
It's doing fairly well. I mean, apart from the contribution from some inventory investment, domestic economy is expanding at a pace slightly above potential, I think, driven by pent-up demand. We relaxed pandemic-related restrictions in May, and this is stimulating consumption and investment. There's also green GX, DX related business fixed investment taking place. So investment is fairly strong at the moment. We think the economy is going to expand at slightly above potential for some time. But there's, of course, a lot of uncertainties going forward, including what may happen in Europe and the United States.
I asked if you guys coordinated or talked about monetary policy before. I mean, does that happen? Should it be more coordinated? Because you're all doing different things right now.
Well, I mean, I'll start. I mean, obviously what we don't do is say, what should we do? What should you do? Because we're all setting monetary policy for our areas, and that's the law in all of our areas, actually. So we don't do that, but we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. We've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
Yeah. I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over-tightening?
No.
No, you don't. You approve of the policy. You've had a very tight labor market for a long time in Japan, even before COVID.
Yes.
Demographics. Yeah.
It's working in a way to tighten the labor market for quite a long while. And it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering, easier to fight inflation last year when the economy was doing better. But now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing albeit at a modest pace. As I mentioned earlier, though, yes, there was no question the The first question was, how fast should we go? And we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract, some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. We've seen what that looks like, and it's just something that we have to do. It's the one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding of inflation expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend here.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this idea that a lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting as it has been set, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other than policymakers to actually consider those ideas and to explore them and to weigh the cost and benefit and all the rest of it. But at this point in time, I think we have to be as persistent as inflation is persistent, and we have to be resolute and decided and determined in reaching the target that we have set, and not debate the target as we are running that race.
But it does raise the question, Governor Bailey, about how far inflation will come down to.
It does, but let me reinforce what Christine said. What is the inflation target? It is the definition and practice of price stability. In our legislation, it is what price stability is taken to be. That is the 2% target. And I don't think anything has changed in terms of what we mean by price stability. And I think that's a very important point to start with. It's the anchor that we have to always maintain. Now, in terms of bringing it down, yes, I mean, we're facing, have faced and are facing the biggest challenge for a very long time. But we have to meet that challenge. I don't think it is the right thing to do to say, well, this is all a bit difficult, let's change the target. I really don't think that is the right thing to do. I think that would be a very bad thing to do. And I think, although I very much agree, as Christine was saying, that there are things we understand about inflation expectations and things we don't understand about inflation expectations. I think taking risks of that nature with inflation expectations, but also, fundamentally changing what we mean by price stability when there's no good reason to do that, I think would just be the wrong thing.
How do you read, Governor Ueda, the inflation expectations? Because they've crept up in Japan as well.
Yes, we've been for a long time trapped in a zero inflation expectations equilibrium. So we've been trying very hard to move this to a 2% inflation, 2% expectations equilibrium. To do so, we had to de-anchor expectations from zero, raise inflation expectations, and in the future, we'll have to re-anchor them at 2%. This is a formidable task. And now we are seeing signs that inflation expectations are rising. But as I said, not to the extent that we are fully in the 2% inflation expectations equilibrium.
It also raises the question, you mentioned the labor market and some of the post-COVID changes about just how COVID has distorted the data and has made travel, for instance, so strong for so long. And I wonder, Chair Powell, how you look at the COVID impact on the economy and how it's changed the way you make forecasts and you think about what's happening right now.
Well, I think there are changes, and we don't know how persistent they will be. Certainly work from home, and you can see the effect on commercial real estate, particularly office real estate and the surrounding retail that's suffering in many major cities. We don't know how long that will last. It feels like some part of that will be persistent and will last. You mentioned the data as well. We've I guess response rates to a lot of the data that we collect and that other organizations collect, the response rates have gone down, and you're seeing a lot of volatility in some of these data series. More so, I would say, more so than we've seen historically. So the data are even a little bit foggier than they usually are. But we'll be, in terms of what the effects of COVID, it's going to have long-term effects on the economy. There may be loss of productivity. There's certainly been, for a generation of kids, some loss of education and training. I think it's hard to say how persistent all this will be.
What is your level of concern of commercial real estate, since you mentioned it in the U.S.?
It's something that we, of course, are watching carefully. The way it lays out is the large banks don't have large concentrations of commercial real estate. So that's a good place to start. A surprisingly large part of exposure to commercial real estate is in the banks that are under 100 billion. But there, the worry is more banks that have a high concentration, and they're relatively few. So it's something that we're carefully monitoring. Bank supervision has a playbook for this. So supervisors are talking to banks about their concentration of real estate and what can they do and how do they manage themselves out of this. It's something that we're well aware of. It's not a surprise, and we're focusing on it.
Is it one of the reasons you were cautious in the last meeting?
Commercial real estate? I wouldn't say so. No, I just, generally speaking, it was at the last meeting, it was about, what's in the pipeline, how far we've come, what's in the pipeline. I will also say that, though, that the bank stress that would part of the decision, in my thinking anyway, was the bank stress that we experienced earlier this year. There's a fair amount of research showing that when something like that happens, bank credit availability and credit can move down a little bit with a bit of a lag. So we're watching carefully to see whether that does appear. Of course, tightening in financial conditions is what we're doing intentionally. So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
Yeah, it gets into the question about lags. How long are lags, Governor Bailey? And do you expect to see more?
It's a very interesting question in terms of the transmission of our monetary policy decisions. So if I can just illustrate it with the UK case, and obviously it's not the only part of the transmission mechanism, that would be clear, but it's an important part to illustrate it with the UK mortgage market. So we've seen a big structural change in the UK mortgage market since the last tightening cycle of monetary policy, which of course, accepting passage of time, was about 20 years ago, actually. And that change has been a change from a variable rate mortgage market to a fixed rate mortgage market. Now, I must say, obviously with Jay here, it's not a US style fixed rate mortgage market. It's a much shorter term. So the average term is often around 5 years. But we know, and we think around about 85% of the stock of UK mortgages are now sort of in that part of the market. So we know that the transmission of monetary policy is going to be slower as a result, because obviously it depends upon the sort of the timing and the sequence of those fixed terms coming to an end often. So we have to judge that. I mean, it's another factor and another sort of element of uncertainty that we have to judge. when we're taking our decisions, which is how much of the tightening that we've already done has come through and how much is yet to come through. And we know that referring back along quite a way into the past isn't going to help us in that respect. So we have to sort of formulate those views afresh. And so it is part of our decision-making calculus is how much more has to come through, when will it come through, and also how powerfully will it come through. And all those things are things we have to take into consideration. And as I said, history isn't going to be a great guide for that, given the change in the market.
So a year? What's a lag?
Well, what you see, and of course you can compute, is the sort of the profile of mortgages coming up for renewal, renewed terms, and we can see that over the next year or so, there's quite a lot of fixed rate mortgages are coming up for renewal. So yeah, we can factor that in. There is another element, I say, of uncertainty as to just how that will work its way through.
President Lagarde, how do you think about the lags?
I think of the lag in three steps, if you will. The first one is transmission in terms of tightening of the financing terms that are made available and how markets absorb the decisions that we make. And on that front, we have a good and reasonably rapid transmission. We see it in rates, we see it in volume of loans, and on both accounts, there is a good absorption and a rapid transmission of our monetary policy decision. But that's only step one. What we need to see is step two and how it materializes on investment by corporate. And for households, it's predominantly mortgages. And for the euro area, there is a lot of heterogeneity because you have markets where mortgages are at fixed rate, markets where mortgages are at floating rates, some that are readjusted every so many years. So we have to look at all those data very carefully. But it seems that the transmission is likely to be less rapid than it had been in the past because there are many more fixed rate mortgages now in the euro area than there was, say, 15 years ago. And that's not it. We need to see it then, channel to the third step, which is inflation. So we want to see that transmission strength through step one, step two, step three, and make sure that this is really having an impact in terms of the fight we have against inflation.
Governor Reda, do you worry about the impacts, the lagged impacts of their policies on the global economy and on your economy?
Oh, yes, but for ourselves, we haven't had any serious monetary tightening for 3 decades. I was a board member of the BOJ 25 years ago. Then the policy rate was about 20, 30 basis points.
Wow.
Now, minus 10 basis points. So,
and it doesn't sound like it's changing anytime soon.
So in terms of that, the lag in the effect of monetary policy could be at least 25 years. We'll see what will happen if we get to normalize policy seriously. But we'll have to be very careful here.
Be careful what you wish for, I guess. So, Chair Powell, are you more worried about the lag impacts than they are because they're still hiking rates?
I don't know. I wouldn't want to compare. I would just say again, so what's different this time is actually, though, that markets move substantially in anticipation of moves. So by the time we lifted off in March of 2022, the 2-year had moved from 20 basis points up to 200 basis points. So financial conditions now move in expectation, and the whole modern communication strategy really helps that along. So that is different. What may or may not be different, and we also haven't had this kind of tightening in 3 decades. Really, we've had tightening, but it wasn't. This looks more like tightening cycles from the 70s and 80s. So what we see is a picture of literature that has the older literature says a year or 2 for activity and add a year for inflation. There's new literature that says it's much faster than that, and I think we just have to use our to watch and see what's happening. There are reasons to argue that it would be faster this time or slower this time, but I just don't think we know. at this stage.
Well, it kind of gets into the question about the markets, and you're saying that it's a transmission mechanism. You're all talking very hawkishly and saying there's more work to be done, and we're still worried about inflation. The markets pretty much think you're almost done, all of you guys. Maybe one more hike in July, and then done, and then into cuts next year. Is that wrong, President Lagarde?
You know, I look at the data we have. I look at the mandate we have. I look at the transmission lag, and we've decided for ourselves that we would use 3 criteria. That's what we are focused on. Of course, we are not completely oblivious to what happens in markets, but we have to be guided by what the mandate is, what the data delivers, and what criteria we take into account in order to determine our policy and to establish our stance going forward. That's the only way to go.
But I guess, there's financial conditions, and I don't know, Governor Bailey, are they working against you? You're trying to fight inflation, and MSCI World is up nicely this year.
Well, by the way, I mean, the market, I don't think thinks we're nearly done at the moment. I mean, they've got a number of further increases priced in for us. My response to that will be, well, we'll see, because we are, as we were saying earlier, we're essentially evidence-driven in that sense. So, we'll make our decisions based on that. I think you're right to point out, as you said earlier, and I would draw this point out, that there are 2 parts to this. There's where the peak is, and then how long it's sustained beyond that. And I think both of those are relevant. Both of those are things that will, I mean, sorry to state the blindingly obvious, will emerge with time. But I've always been interested that the market thinks that the peak will be quite short-lived in a world where we're dealing with more persistent inflation.
Right. I mean, they did finally price out the cuts in the US a few weeks ago. Market was primed for cuts. I assume you were pleased to see that that's no longer the case.
So if you go back and look at forecasts from the participants on my committee on inflation, you'll see, we've been consistently thinking this is going to take some time. It's going to be a process that will take longer than we would have hoped. And it may well be a bumpy process, but markets have gone back and forth between pricing and what appearing to price in pretty quick declines in inflation to coming back to being more in alignment with the thinking of the committee. And that's where we are right now, is closer to where committee participants are. But as Christine said, we're not focused on what the market's forecast is. We have our forecast. All of us who are on the committee, we work hard to develop an understanding of what's driving inflation and what the path forward for inflation is. We make our best estimates. And that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less. And of course, if that day comes when that turns around, that'll be great. But we don't expect that. We don't plan for it.
So is it counterproductive to you that the stock market has rallied, the bond market has rallied? I mean, the market is fighting the Fed. The market thinks you're closer to the end. And I mean, that does make financial conditions easier.
Wasn't that the...
You can't fight the Fed, but they're fighting the Fed. Is that a problem?
I don't see it that way. I don't look at it that way at all. Honestly, we have different jobs. Our job is to bring inflation down to 2% and sustain maximum employment. That's our job. That's what we think about. We look at the data, and that's what we care about. And markets react, different parts of the market react in different ways. It's just not something that is a principal focus of our work.
But it did seem last year like you wanted a weaker stock market. You used the word pain at Jackson Hole. It seemed like you were trying to communicate that financial conditions should tighten, and less so this year. Is that right?
Not really, no.
Okay.
Of course, we work through financial conditions. That's what we do. Our rate and our, all the things we do and say work through financial conditions to affect the real economy. That's how it works. But it's broader financial conditions. So we're not focused on any one market. We're never thinking, oh, let's do this to this market. It's just in general, let's communicate what we want to do and why we want to do it. And financial conditions adjust. And that's really all we can do. We do not target particular parts of the market, although of course we do monitor market conditions.
So you don't care what the stock market's doing?
I look at broader financial conditions. It's one of many conditions, along with interest rates, credit spreads, everything, all of the conditions and the availability of credit. It's one of many things. And again, we don't focus on any one thing as the key thing.
Governor Ueda, how important is it to you, the markets, as it relates to financial conditions and the mechanism for monetary policy?
I mean, the stock market.
Stocks, bonds, currency.
So stock prices have been rising fairly sharply since spring this year. Stock prices theoretically are affected by interest rates and investors' view of the economy. We haven't changed interest rate, so probably investors have become more optimistic about the future of the economy. Of course, we don't want serious financial imbalances in the economy, so we keep monitoring.
How do you think about, President Lagarde, the risks to the economy, especially geopolitical risks? You know, in Europe now we have this, we were all glued last weekend to the news out of Russia and the Wagner rebellion, and we're wondering if now political instability in Russia presents a further geopolitical risk to the global economy.
Well, I think I look at it, we all look at it, and we are all concerned about geopolitical development by virtue of the profession that we have, because it does have an impact on supply chain, it does have an impact on trade, it does have an impact on the uncertainty. And we can only say that at this point in time, uncertainty is high overall. And a big factor of that uncertainty has to do with the geopolitical difficulties and conflict or quasi-conflicts that abound at the moment. So yes, we are looking at that. But you know, do we have to make a moral judgment on this, that, or the other? This is not the job that we have. But it clearly has an impact on how the economy is going to change and be transformed. And whether it will have an impact that is inflationary or disinflationary, I think is also to be determined. I think there will be various schools of thought along those lines.
Yeah, I wonder how you think about next winter. I mean, Europe got lucky.
We hope it's mild.
What if it's not?
But storage is what, 69%? Michael, the expert on Isabel's panel, said that 69%, and we are going to hit 95% by the end of the summer. So that should put us in a good position for the winter. But I'll say one thing, which probably we had not factored in sufficiently, and maybe that applies to all of us. It's the resilience of our economies and the resilience of the entrepreneur, the corporates, the way in which we have sort of, in a matter of a few months, reorganized ourselves. You know, just think 1 year back, everybody thought that the German model was dead, that Europe was going to be completely on its knees. Well, these things have not happened, and the resilience has been demonstrated at all levels of society.
I totally agree with Christine on this. That resilience, I mean, you see it when you talk to businesses. I spend a lot of time talking to businesses, and I've spent a lot of time in recent months talking to food-producing businesses to try to understand the sort of, the slower than, frankly, we expected decline in the rate of food inflation. And one of the things that I get quite consistently, and this is where sort of the Ukraine-Russia situation comes through for real, is they say, well, you know, last year we brought forward sort of supplies to a much greater extent than we would normally do because we were not confident we could actually get them. Consequences, we've locked in higher prices for, you know, sometimes they say 6 months to me. And that, of course, is affecting the, you know, the passage of inflation, particularly food prices in this case. So these things do have a very direct effect and are continuing to have a very direct effect, actually.
But there's nothing central bankers can do about that, is there?
Well, I think the first thing we need to do is understand it. That's a good starting point. Well, we have to then design.
You can always just keep crushing demand, but you can't do anything
Well,
about
we have
food
to
supply.
design policy. I mean, we have to design policy and, you know, take our decisions with the best. Yeah, we always take policy. Yeah, we always take policy decisions on a forward-looking basis. So we have to do it with the best information and understanding we can get of these things.
So do you still? So to what extent, I guess, is the war in Ukraine driving supply-side inflation for materials around the world?
Well, following on from what I was just saying, I think the conclusion I draw from that is, and this is what the businesses tell me, is yes, we are going to see actually a fall in the rate of food price inflation, for instance, but it is taking longer than we expected. So that's what we have to factor in and decide how best to in a sense, to respond to that with monetary policy.
It's not just Russia. Governor Ueda also, we're following the tensions that have increased between the US and China, between Europe and China. Do you think that's having a material impact on global growth?
Well, at least there's a tendency to relocate production sites out of, say, China into other Asian economies, including to some extent Japan. So in the short run, this is having a small positive effect on the Japanese economy through business fixed investment. But in the longer run, there will be inefficiencies all over the place. So we'll see.
So Japan's a beneficiary of the flight out of China?
In one sense and in the short run, but in the long run, I'm not sure.
I mean, Chair Powell, how do you think about, it's obviously a risk and it hurts trade. How do you think about the US-China relationship as it impacts the economy?
That is the way we think about it. We don't have any role to play in the relationships between the countries, but China's a very large, important economy. It's a big trading partner, mainly consisted of us buying things that are made in China. I don't think, and of course, and the Chinese economy came out of the COVID and looked like it was recovering strongly. Now it doesn't look like that. It looks like it's slowed down, and there's some issues there. From the U.S. standpoint, at the margin, that probably means a little bit less global demand. I wouldn't say it's a first order consideration for us, though.
How does the Chair Powell reference the disappointing nature of the Chinese economic recovery? How does that play into Europe's recovery or the global growth picture?
Well, first of all, I think we have to be attentive to the emerging market economies at large. At the moment, they are producing about 60% of global growth, some of which is now a bit more focused on domestic development and consumption, and less so on trade. But if you look at the trade volume numbers from China to many other countries, particularly the advanced economies, that has not changed significantly. So the trade volume is still significant. And I'm not breaking any news here. The Chinese authorities themselves say that they're likely to have a 5% growth this year in 23, rather than the 6% that they had initially forecasted. So that will have an impact, given the size of the Chinese economy, on global growth at large. We have to, when we do our projections, when we look at the economy, we look at the global economy, and then we sort of narrow down and zoom on the European economy and the euro area in particular. But everything that happens in China, in the United States, in the UK, in Japan, in emerging market economies actually matter for us, because we are strongly interrelated and have been trading with each other for a long time. And if anything we've learned from COVID, in addition to the pain and suffering for many, is the fact that we are vastly dependent for the supply of rare earth and various metals that will be critical for the development of the economy of tomorrow, if we decide to firmly go towards the green economy that we should be aiming for.
As an open economy, one of the things that's just exactly as Christine says in terms of how we do our process, one of the things that we spend quite a bit of time on is world export prices. Now, actually, in the recovery from COVID, and of course this was the supply chain shock, we saw quite a big contribution to goods price inflation from world export prices. We're now seeing those prices definitely start to weaken. So that will be another determinant going forward of policy.
As central bankers, do you plan for the worst case scenarios on the geopolitical front? I mean, if China invades Taiwan, then what? What does a central banker do? Is there a contingency for that, Chair Powell?
We use our tools to achieve our legal mandates, if that happens.
Got that Fed speak down. You'll hold a special meeting. No, I mean, it's a volatile world we live in, right? And then
so we do have, in every FOMC cycle, we look at, our staff works up 6 or 7 or 8 alternative simulations, and they simulate different things. It's not so much geopolitical events, though. It's more different ways the economy could play out. And we all the participants read those and think about them and talk about them, and they come up in our meetings. We talk about them. So it's very helpful, because you can't get too focused on the modal path in a world where It's just very hard to predict the economy, even in normal times, it's very hard to predict the economy, let alone times like today.
What sort of simulations do you talk about?
I'm going to leave that to your imagination.
I bet I can think of a few. President Lagarde, Chair Powell did talk about, I mean, one of the things that I don't know that there was a simulation of is we had a few bank failures in the US this year. And I know it forced some of you into action to shore up banking systems. Are we in good shape now? Is the global and European financial system in good shape? Have we healed?
You know, I can only speak to the banks over which we have supervision, and those are the euro area, the European banks. But I'm looking at the euro area specifically. We have been, you know, enforcing Basel III to the entire banking sector. The capital ratios are very high, 15.3% if I recall. The leverage coverage, the liquidity coverage ratio, very high as well. So we have not experienced, you know, the turmoil or the difficulties in Europe. And Europe does not include Switzerland. Thank you very much. But we are extremely attentive. We reinforce the stress testing constantly. We are I'm very pleased to see that the Basel III agreement has now been reached, as I understand, between Parliament, the Council, and the Commission, so that we can actually roll out Basel III with as limited exception as possible. And we have to continue doing that job.
Any lessons that you took, Governor Bailey, from what happened earlier this year?
Well, let me start with a sort of bit of backdrop. I think it's important, drawing on what Christine was saying, I think it's important to, in a sense, reflect the fact that the regulatory changes we made after the global financial crisis have paid off, in the sense that we've been through, or we are going through, some huge economic shocks. And the banking system, certainly I can speak again as Christine does, I can speak for the UK banking system, is resilient to them and is doing what we want it to do, which is support the economy, not the other way around, to be honest, going back to the crisis. So that's an important starting point. Now, I think there are important lessons from, important issues that we have to reflect on from what happened. Christine made her subtle reference to Switzerland. Well, there's a huge sense of irony in the British, Christine. Look, I mean, there is obviously a question posed by the Credit Suisse, handling, which is, are the resolution plans for the major banks that we've spent the last 15 years developing fit for purpose, or are they not fit for purpose?
Okay.
And if they're not fit for purpose, then of course we cannot sit here and say all's fine, because clearly we're going to, regrettable though it would be after 15 years of work, we're going to have to sort of, tear them up and start again. Now, I'll give you my view on it. I'm going to say this. I have not yet heard the case made to me which suggests that they are not fit for purpose. I'm going to state that, but I'm not going to leave it there. We have got to have, we've got to have this out and decide whether, it goes one way or the other. My starting point is I remain to be convinced of that assertion, but we can't let it rest there. I think we've all got the question of, how our banking systems handle, a steep rise in interest rates. We do stress tests to test that. We've got capital provisions for, related to that. And we've all got to think hard. I think the third thing I'd say is we've got to think hard about the speed of run question. But I think we've got to think pretty carefully about that, because, if we go to extremes on that argument, we're essentially heading to narrow banking. And speaking myself, I don't think that is a sensible place to head to. So we've got to think quite carefully, but quite, I think, creatively about how we maintain the banking system that does what we want it to do, which is create credit in the economy, create assets that are naturally illiquid, and deal with this speed of run question. And we've got to take that one on.
We're actually going to get stress tests this afternoon in the US, which I won't ask you about, Chair Powell, but I will ask if you think that the US regional banks are resilient right now.
I do. So I think, first of all, I think the overall banking system is strong and resilient with very high levels of capital and liquidity, double the levels that they were at, and then some before the crisis. So the innovations that we put in place, the regulatory changes and higher capital, those are all in place in the United States as well. So when it comes to the events we had earlier this year with 3 banks that had pretty idiosyncratic business models and funding models as well, I think we need to learn lessons, and we're not hiding from that at all. We understand there going to need to be regulatory strengthening of both regulatory and supervisory practices as it relates to institutions of that general size, I would say.
You got a lot of questions on that from Congress last week.
That's mostly what they wanted to talk about.
They want to make sure that you aren't, well, in part, not going to increase capital levels and sort of choke off the small and regional banks in this country and make it hard for them to compete.
So the U.S. has something like 4,500 banks. It's the most banks by a pretty big margin, I think, of any major economy. And we think it's a real benefit to have banks of different sizes and business models that serve local communities and offer different products, as well as having the large banks. And the large banks in the United States are very strong, well capitalized, a lot of liquidity, and they've been a source of strength, I think, through the last couple of events. So I think it's important that whatever changes we do make, keep in mind the need to preserve the business models of these of smaller banks and not just of the largest banks.
Any concerns for you, Governor Ueda, on the strength of the global financial system at this point as we go through this, I don't know, once in several decades tightening period?
I can only talk about Japanese banks. I think they are well capitalized. They're capitalized. They have enough liquidity. It's true that some smaller banks, regional banks, are sitting on non-negligible amount of valuation losses on their security holdings. But on average, that's about 1% of their core loan capital. So it would be okay. But if we do get to normalize our monetary policy, because we go into the 2% inflation rate equilibrium in the sense I discussed earlier, then rates may go up by large margins. And we will have to be careful. We'll have to be carrying out all sorts of stress tests, I think.
I also wanted to ask you, if you go into a more normalization stance away from negative rates and the yield curve control, how you'll manage the risk of the government's enormous financing needs, and whether that's a concern that you think about.
Well, we keep saying that's the business of the government and the Diet to create sustainable government finance.
Fiscal policy in general, I'm curious if you guys will bite on this. Is it helpful right now or hurtful, President Lagarde?
Everybody has to do what everybody has to do. Man's got to do what a man's got to do. Monetary policy makers have to decide on monetary policy, and fiscal policymakers have to do their job. It is true that there are circumstances where working hand in hand and supporting each other has proved helpful. I think we had a very good demonstration this morning in one of the lectures that we had. I think what we have very clearly stated as a governing council of the whole Eurosystem is governments, please, it's time now to roll down the measures that you had decided for COVID and for energy purposes, and that you adopt a path that will take you to better sustainability of your public finance. So we hope to see that. The fiscal space that has been allowed for the various non-conventional fiscal support that were decided back in 22 and 23 very much should be rolled back in the course of 23 and certainly should not be expanded in 24, bearing another major shock. But that's our recommendation, and we make it very clear in our monetary policy statement and have made it very clear in the last statement that we issued.
I mean, we learned in the UK, what was it last year, when monetary and fiscal policy don't work together, it can be a big problem.
Well, because what we had to deal with in the UK last autumn was actually a financial stability issue, and we dealt with it. And it was very clear that that was the issue we dealt with. We didn't deal with anything more than that. It's not our job to get involved in fiscal policy in that sense. And we always, when setting monetary policy, take fiscal policy as announced, as a conditioning assumption for our decisions. So I don't go beyond that in terms of commenting on the stance of fiscal policy. I mean, the one thing I've said in recent times, and I don't mind saying it again, is that I welcome the fact that the Chancellor is very much using fiscal policy to try to address the structural issues in the economy. That's not a comment about the stance of fiscal policy about more or less. It's a comment about the fact that, going back to the point I've made about labour markets, and actually the low potential rate of growth in the UK economy, that the more we can do to tackle that, frankly, the better.
What about you, Chair Powell? I mean, there's been a lot of fiscal largesse in the United States, the COVID stimulus, and now even new policies that are just filtering through, like Inflation Reduction Act, infrastructure, chips. There's still American Rescue Plan Act money getting doled out. Isn't that making your life harder?
Well, so echoing my colleagues, our assignment is to deliver price stability kind of regardless of the stance of fiscal policy. And we don't play a role, formal or informal, in advising the fiscal authorities. There are other agencies in Washington that do that, and that's really not our job. I will add, though, without crossing any lines, that the spending during the pandemic was very high, and it's come down. And so we look at the fiscal impulse from the level of spending, and it's really not material. It may even be slightly contractionary, but let's just say it's flat. You identified those bills, and I think you are seeing some of that money showing up in construction. This construction numbers, it's supporting construction activities, particularly the infrastructure bill. But I wouldn't say that that's if you look at where the inflation is in the economy, I wouldn't say that that's an important driver of inflation or something that we think about or consider.
So you mentioned the consumer. So the excess savings, you think have pretty much come down. Where do you think the U.S. consumer is headed?
The consumer had savings from two sources. One was just the fact that people couldn't travel and couldn't kind of spend money on services. That was a lot of it. And there were also the fiscal transfers that happened. And those, there are many different estimates. I would say for people at the lower end of the income spectrum who tend to have a high marginal propensity to consume, most but not all of that money is gone. So there's certainly some residual support for spending in laws that passed at the beginning and during the pandemic. But that's, again, I wouldn't say that's today the main driver. I think if you look at the strength of the labor market, still creating more jobs than there are new entrants to the labor market, and wages are still pretty high. So you're driving up disposable income, and that is driving consumption, and that's driving the economy.
Wanted to also ask you guys about the balance sheet, very hot topic. Governor Wada, how do you think about the expansion of the balance sheet, and how much is too much?
Well, it's a tough question to answer. At the moment, we are using government security purchases to hit the range for the long-term interest rate we have set, which is 0 ± 50 basis points. So the size of the balance sheet is an endogenous variable.
The rest of you are kind of in shrink mode in the balance sheet, or roll-off mode. You've been more aggressive, Governor Bailey. How has it gone smoother than you expected?
Well, so far, I don't want to tempt fate, it's gone very smoothly, actually. By the way, the reason that you say more aggressive, just to be clear, is that we've got a longer duration of bonds in our portfolio, government bonds in our portfolio. So leaving it to an organic runoff would mean a lot longer runoff for us, I think.
That's why you're outright selling.
So that's why we're selling. And so the target we set for the year, the 80 billion target, was the sum of the natural runoff plus the difference between the target we set and that. And it's that element that we're doing as active sales. So that's gone, I would say, very smoothly, actually, so far. I'm very happy with the way it's gone. I think the second question that we're certainly looking at actively, of course, is just how far will we go? And I look at it particularly in terms of the stock of reserves now in the system before we hit what I would call the equilibrium level of reserves. Now, we may go on selling the QE stock below that because we would shift our operations around. I would expect to do that. But it's important to focus on where we think that sort of natural level of the balance sheet, which won't be constant over time, by the way, but where we think that natural level of the balance sheet is relative to where we are today.
How do you think about it, President Lagarde? And is there pressure building for you to go faster when it comes to shrinking the balance sheet?
I would say that the interest rate is the primary tool that we're using at the moment. Second, there is almost a contractual reduction of the balance sheet of the ECB because there is a reimbursement of the TLTRO that we had put in place during the pandemic, and that is actually happening now, if not yesterday or the day before. Third, as of the 1st of July, we will stop any reinvestment under the asset purchase program. So there is a natural declining of the balance sheet of the ECB, which is only, a first step. We are discussing our operational framework. Hopefully, we will be able to complete that work in the next 6 to 9 months, and that will really determine the size, the desirable size of our balance sheet, which is always a factor of also the circumstances and the situation we are in. But that is coming.
Is it going smoother than you thought it would as well, Chair Powell, QT?
Say it's working as we had hoped and expected it would work. We have a entirely passive program. As treasuries and mortgage-backed securities mature, they roll off subject to a cap, and it's been moving along at a pace. The underlying pace, if you hit the cap, is about $1 trillion a year. And reserves appear to be quite ample, so it has ways to go.
Is there anything that would make you speed that up or slow that down?
We always say that we're prepared to adjust in light of evolving conditions, but I don't see anything that would cause us to want to do that right now.
Okay, so in the moments that we had left, we've talked about a lot of the risks. We've talked a lot about some of the concerns out there. I want to hear some optimism, maybe, and what makes you feel. None of you are really talking doom and gloom on recession, but what makes you, President Lagarde, optimistic right now?
In my professional field?
However you want to interpret the question. Personally.
Otherwise, there are lots of things that make me happy, and I hope for all of you. I'll just mention one success, which I'm really proud of, and I'm very proud that Fabio Panetta was the one who led that exercise on behalf of the entire group. Today, the European Commission has published the legislative draft for the European digital, for the digital euro, for our CBDC. And that gives me hope, because I think that it really demonstrates the capacity to innovate, the capacity to work as a team, the capacity to anticipate what digital payments will be tomorrow. Now, some people are very skeptical and they say, well, you're taking risk, financial stability, possible runs that will be accelerated by this. And all I would say is, number one, you have to be ready. You want to keep the sovereignty of your currency. So many years ago, who would have thought about all the users and the applications that you have on your cell phone? None of us. So being prepared, being ready, paying attention to what actually Europeans, and particularly young Europeans, want in terms of currency and form of currency is something that we have been doing, that we have accelerated, that we have not decided for sure, but at least the legislative piece is on the table. There will be a lot of discussion. And that's, in a way, also the result, one of the good benefits of COVID. We have talked about the downside of COVID and the consequences, but the way in which so many of us have become more digital, better equipped, probably more productive, it will be demonstrated probably with a lag time. But when I look at my member states, the countries that were least digital have really traveled very fast to become much more digital. So that's a good reason to hope. And the resilience demonstrated, but I have mentioned that earlier on, by everybody, from the individuals to the entrepreneur to the corporates to governments. We, in Europe, decided to get together to borrow jointly, despite the fact that it's laborious, that it's painful, that it gives a lot of things to report about to a journalist, is also a sign of progress.
And just to be clear, a digital euro will happen when?
That will be decided by the governors in Governing Council. We will decide that at the end of October. And then there will be another phase of piloting, experimenting, fine-tuning, because if and when we go, as will be decided by the Governing Council at large, we want to get it right. So we're not going to do a half start or a fake start. We will move with success.
What makes you optimistic, Governor Bailey?
Well, actually, I'm going to build on Christine's theme, because as well as we're also working on retail digital euro, we're actually also working on wholesale digital money and completely rebuilding our wholesale payment and settlement system in the Bank of England to enable what could be a complete revolution in the infrastructure of financial markets and trade finance. And this is very exciting. So we put the wiring in the weekend before last. The engine should go in next year, and this has enormous potential to change the world at the wholesale level as well.
It's interesting, I feel like the world has moved on to AI beyond digital payments. Are you guys incorporating AI into your thinking about economies and your toolboxes?
I think we're all on a learning curve. I don't know, I feel quite old when it gets to this, but yes, I mean, we're looking at it in two respects, certainly. One is, three respects. One is how it will affect the economy. Two, how we can use it ourselves, both in our sort of, analytical functions, but also actually in our operational functions. Yeah, we're looking at it, I would say, with very open eyes. You can see the strengths and you can see the current weaknesses of it. And of course, it moves very rapidly. So yes, we're having to, certainly I can speak for ourselves, we're having to devote quite a bit of time now to what the potential is for that.
Chair Powell, is AI one of the things that makes you optimistic?
So on AI, we're just doing what everyone else is doing. We're trying to get smart about it, and it's obviously has huge possibilities. Technologies tend to propagate through the economy fairly slowly, and this one may be the exception, maybe not, I don't know. But it's something that we're spending a lot of time on, way too early for conclusions. I wouldn't use optimism, but I would say this in answer to your first question, which is when inflation first arrives, it's really due to very strong demand for goods and goods pipelines that just aren't working, and shortages. So that's where it comes from. It wasn't about the labor market at all, right? Or very much. As we get to this stage and to looking forward, we think it will be significantly about getting the labor market supply and demand back in alignment. I would say it's a positive thing. I'll say it that way. It's a constructive thing that we've been able to raise rates 500 basis points with the expectation of going further. And we still have a very strong labor market, but nonetheless one that is in fact cooling in just the way we would have hoped, which is to say through things like lower job openings. Job openings are coming down. The quits level has returned to its pre-pandemic level. Wages have, if you look at employment compensation index or average hourly earnings, they've moved down about 1% towards more, still very high, but towards more, so a more sustainable level that's consistent with 2% inflation. So I would just say that's the makings of, if that process continues in a gradual way without really any effect on employment, the longer that goes on, the better. And in a way, I take that as a very constructive path. It is not guaranteed, but the fact that this is really there, and that's what's been happening for a year, well, more than a year into our tightening cycle, I would take as a positive thing and perhaps a hopeful one for the future.
Just be careful not to overdo it, right?
Right.
What about you, Governor Ueda?
Let's see. As other central banks are thinking of issuing digital monies, we are taking a different route, and we have decided to issue new currency bills starting next year.
You're going all in paper.
This will cheer up public's confidence in the BOJ. More seriously, as I said, wages have started to rise at 2% or so for the first time in 3 decades. More importantly, we are seeing as a sign of a change in inflation expectations, changes in price wage setting behavior of businesses. So previously, businesses hesitated to increase prices because if they did, others will not follow suit. Now say they are raising wages because if they didn't, they will have trouble recruiting workers because others are raising wages. We think this is a good sign for us.
So the topic of Sintra of this ECB Forum is inflation, volatility. So now is prediction time. In 1 year, when hopefully I'll be invited back, President Lagarde, inflation rate in the UK is what?
Well, our last forecast, we expected inflation to come back to target towards the end of next year. We're going to start the next forecast in about 2 weeks' time.
I was trying to
Yeah, you're
get a
trying to
jump
get
on
further
that.
than that. Yeah.
Yeah, I was trying to
Nice
jump
try.
on that. Do you get to 2% by this time next year, President Lagarde?
You said a year from now, right?
Yes.
Okay, so the projection we have is 3% for next year. Headline.
Will you be satisfied with that?
I want it to be timely. We all want it to be timely.
Timely. Okay. Chair Powell?
I don't see us getting back to 2% this year or next year.
You don't?
No. I see us making progress, steady progress on, this is core inflation.
Yep.
Headline inflation is coming down now, is lower than core. But for core inflation, I don't see us getting to 2% this year or next year. I see us getting there the year after.
2025?
Yeah.
Core inflation 2%. So you're going to be restrictive for a long time.
No, well, we will be restrictive as long as we need to be. But, you know, if inflation is coming down sharply and we're confident that it's on a path to 2%, you know, that would be a different situation. You would begin to think about loosening policy, but we're a long way from that. That's not something we're thinking about now or in the near future.
Governor Ueda, are you going to get to the 2% by your measure?
So our projection as of April, inflation projection, has for 23 fiscal year, 1.8%, 1.8 headline, 2.0% for 24. Now, this makes my job of justifying underlying inflation rate staying below 2% a bit harder. But we keep saying that we don't have a lot of confidence in this 2024 forecast. This may change depending on the data to come out.
Do you guys feel you've been through a lot of hard moments, you know, COVID and the inflationary challenge, and now we're trying to see economies weaken. Do you feel like it's a particularly difficult point in your central bank journeys, Governor Bailey?
Yeah, until we get inflation back down to target, you know, we've got a very big job to do, and it's a job we have to do. Well, I don't know about stressful, but I think, you know, look, we sign up for this job, and you don't get to determine the conditions that you do it in. So we just got to do it. I mean, that's our job.
For you, President Lagarde?
Likewise, man's got to do what a man's got to do. We signed up for the job, and a woman's got to do what a woman's got to do as well. Thank you.
Chair Powell, haven't seen you stressed.
Sorry?
I haven't seen you stressed.
We have a job to do. We know that. We know that society is counting on us to do this job, and that it really matters. Price stability can matter for decades. It can benefit for people over time. I think we all know that, and we'll do the things that we need to do to restore it.
And Governor Ueda is feeling good.
I didn't know there was going to be so much traveling and so many press conferences.
Welcome to the world of central banking. Thank you all so much for taking the time today and all my questions. It was a pleasure. Thank you.
Okay, guys, that is the end of the Jerome Powell press conference. Let me make sure my stuff is working. Yeah, so that is the end of the Jerome Powell press conference here, bro. Do not come over here. There's wires. If you haven't already, hit the subscribe button. If you want to check out my sponsors, we have 3 great sponsors that help support this community. One of them is called Top Step. Top Step is a funded account program in futures. They give you a demo. They test your skill. The base one's $50K. They give you a $50K demo, and they test your skill. If you can hit their profit target of $3K without losing $2K, which is a 2-to-3 ratio, a reasonable ratio, and you can pass the rest of their testing, they fund you $50 grand with a 90% split. Most people are going to fail these, but that's kind of the point. It's a lot cheaper to take one of these challenges and lose than put the money up yourself and lose. And so it's a beautiful way to test yourself as a beginner trader where you're learning to day trade. If you're good enough to pass it, you still keep 90% of your profit, and you get to keep your first 10K as well. And Top Step is the most legit futures funded program in the world. And in futures, you can day trade short, no PDT restrictions. You can day trade the S&P, you can day trade the NASDAQ, currencies, gold and silver. It's just a great way to learn. They have free funding coaches, a lot of good stuff, and some big news is dropping next week as well. So if you haven't already, check out Top Step. There is the link in the chat if you want to help support us there. We also have MooMoo's trading platform. I'm switching everything over to MooMoo because MooMoo is just a really nice trading platform. Again, I'm going to be trading stocks on MooMoo from now on. Free heat maps, great news source, free paper trading. You can do great options, and they give you free unusual activity and options. You can see the unusual activity, which is usually a monthly subscription. You can build great watch lists from there. They have a great market section and just a lot of cool stuff here where the news section is just really, really high quality. And if you open up an account on MooMoo, there's 0 commissions. You can trade the entire time of pre-market, 0 commissions. And if you open up an account and deposit at least $100, they're going to give you free 5 free stocks. If you deposit over $1,000, they're going to give you 15 free stocks. If you deposit over 5K, they're going to give you those 15 free stocks plus a free share of Apple Google or Tesla. So pretty good deal if you sign up to MooMoo. And again, here is the link for that. And the last sponsor that I want to plug here is Chart Prime. Link is in the description as well. The last sponsor I want to plug here is Chart Prime. Chart Prime is a trading view indicator service that you can use in stocks, crypto, Forex, futures. It just can be really, really nice. Like I'll give you an example. They give you reversal signals, and some of their reversal signals are powerful here. Sorry, you can see the alerts going off on my trading view platform. Some of these reversal signals are powerful. Like if you really look here and you can kind of see, this is their 3 alerts today, and this is on the SPY. Reversal down, drops over hours. Possible reversal up, literally called the exact bottom bounce. Possible reversal down just triggered a couple minutes ago, and we've dropped significantly from there. I've also found that if you could wait, like look at how accurate these are. Honestly, they don't repaint as well. I've also found out if you can find this right here, if you can find where a bullish engulfing candle and a reversal signal show up at the same time, they can just be really powerful. And again, you can get it for $35 a month. It's so cheap, $35 a month. They are a sponsor of mine. I'm definitely biased in their favor. But if you want to check them out, here is the link for that as well. You get 40% off using my links. You can find all the links to this in the description if you want to check it out. Great way to help support the channel. And we are going to be doing a crypto show today that we are going to be going live. That we're going to be going live with right now. So again, as soon as we end the stream, it's going to bring you to the crypto show, and we're going to be talking about crypto, and then again, we're immediately going to switch. If it doesn't, for whatever reason, bring you to the crypto show today, so if for whatever reason it doesn't bring you to the crypto show, I'll post this link right here. You can follow the link right here, and I'll bring you directly there. So I'll see you guys over there. Appreciate the love and support. Thank you for helping me hit 110,000 subscribers. And again, I'll see you over on the crypto show right now.